our small businesses can do more with the platform, which for us as a business also means that there's more growth underneath the hood from that point.
All right, Nir Zahar, President and CEO of Wix. Great to see you as always. Thank you very much.
Thank you so much.
All right, still on deck here at Worldwide Exchange. We've got your big money movers and NVIDIA. Not the only chip maker in the spotlight this morning. We are back right after this. Welcome back to Worldwide Exchange. Time now for your big money movers. Some big stock stories this morning. Let's start off with Five Below. You can see shares are up more than 12% right now after the discount retailer reported a smaller than expected drop in fourth quarter same-store sales. The company's profit outlook for the year, that missed estimates, but the midpoint of the revenue guidance was actually above analyst expectations. Five Below says it's taken steps to limit the effects of tariffs. Currently, about 60% of its goods are imported from China. Shares up over 12%. Micron reports second quarter results after the close today. The memory chip maker issued a cautious outlook for this quarter because consumers weren't upgrading their PCs as quickly as expected, and sales in the auto market were hit by lower production. The stock's up 21% this year, but still 30% off of its 52-week high hit back in June. Right now, shares up almost 0.5%. All right, European markets, they are on a roll, continuing to outperform the U.S. so far this year. Steve Sedgwick was talking about it earlier in the show. Check this out, the core MSCI Europe ETF, the ticker's IEUR, it's up more than 49% just this month. Other funds that track Europe are seeing similar or even greater gains, including the iShares MSCI Eurozone ETF, the ticker EZU, which is up 7% in March, hit a new high. Right now you can see it's pulling back just very fractionally, essentially flat right now. All right, coming up, Moody's Analytics Chief Economist Mark Zandi on the Fed, President Trump, and what Zandi says has become a tough spot for Jay Powell. But first, to check on Asia-listed shares of Chinese EV giant BYD. The stock's up 17% in a week and nearly 10% over the last 3 days on the heels of that new charging tech it unveiled. one that can fill up an EV in nearly the same time it takes to fuel up a gas engine. Stock hitting an all-time high. Right now, shares up 1.75%. We're back right after this.
Inflation has started to move up now, we think partly in response to tariffs, and there may be delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks.
That was Fed Chair Jay Powell yesterday laying out the challenging situation the Fed is facing in navigating tariffs and getting inflation to its target. But the president once again ramping up the pressure on the central bank, calling for rate cuts. Welcome back to Worldwide Exchange. I'm Frank Holland. Coming up this half an hour, we have Mark Zandi from Moody's. He's here to lay out why he says the Trump trade war is at the center of growing darkness facing the economy. We're going to have him explain. But first, we're going to check out the markets, taking a look at yesterday. Major indices, as well as the Russell and the transports, they all finished higher for the third day out of the last four, following the Fed's pause on rates. And commentary from Jay Powell, the tariffs may delay cuts in the near term, but two are still in the forecast.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
And following those comments again, we saw the markets finish higher. Take a look at U.S. stock futures. They are higher right now, but important to note, off of their highs of just earlier this morning. So right now, the Dow looks like it would open up about 65 points higher. The S&P and the NASDAQ both up about 0.25% in the pre-market. We're going to take a look at small cap futures. The Russell futures right now, taking a look at those, they've also pulled back quite a bit. They were almost up about 0.5% just about a half an hour ago. Right now, fractionally higher. Right now, we also want to look at the NASDAQ 100 pre-market leaders. Taking a look, you see right here at the top list, AppLovin, those shares up just about 1.5%. Strat, well, kind of saw a shift. Palantir taking the number 2 spot right now, up 1.5%. MicroStrategy kind of 2 and 2A, 2B right there, kind of shifting back and forth. CoStar and ASML rounding out the best performers on the NASDAQ 100. Then we have the laggards, of course, the other side of the coin. The worst performers, Microchip Tech, PDD Holdings, Vertex, and Tesla. Actually kind of shifting right now. We're pulling back from the levels we saw earlier, pulling back just about 0.5% right now. Micron running out the worst performers on the NASDAQ. Right now, we're also checking the bond market yields. They moved lower on the back of that Fed decision. Take a look. You can see it very clearly following that J. Powell news conference. Yields just easing quite a bit. Yesterday, we hit a high of 4.32%. So pulling back right around 10 basis points when we're looking at the benchmark. We also want to look at some stocks that were impacted by news yesterday. Chief among them, that's NVIDIA. Finished higher yesterday after its analyst day, in part because CEO Jensen Huang said he actually understated hyperscaler demand. All the Mag 7 names finishing more than 1% higher, with the exception of Meta. As we mentioned, Tesla pulling back quite a bit yesterday, finishing up more than 4.5% higher. Alphabet finishing more than, or just about 2% higher, exactly 2% higher, I should say. Made a big acquisition of a cybersecurity company as well. Let's take a look at the action in the pre-market of these names again. Minus Meta, that only finished up just about 0.5% higher yesterday. We're seeing NVIDIA up about 0.5% off of its highs for earlier this morning. Tesla moving into the red. Alphabet, Amazon, and Apple both up just about 0.33% right now, but again, off of their highs. Quick check of oil and natural gas after energy leaders. They met with the president yesterday at the White House. Taking a look at oil, still up. We're looking at WTI crude, same level as earlier, up about 0.75%. But Brent crude's actually pulled back, now up under 0.5%. Natural gas still trading lower, down about 2% right now. And two metals that are on the move. Gold once again hit an all-time high yesterday. Copper hit that key $10,000 level yesterday. That was its highest since October on those rising tariff risks. Taking a look right now when we're looking at the precious metals, gold is a precious metal, copper more of an industrial metal. Copper's pulled back under that 10,000 mark, pulling back fractionally. Gold moving higher right now, moving up just about 1/3%, well above that 3,000 mark right now at 3,050. Okay, that is your setup now. I want to turn back to our top story. That's the Fed holding its rate policy steady in the face of rising inflation risk and President Trump's trade war, which could escalate with those April 2nd reciprocal and sector-specific tariffs. It's something that Chairman Jay Powell addressed when he spoke with reporters yesterday.
I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing.
Overnight, the president weighing in on the Fed's wait-and-see decision, calling on Powell to cut rates as a way to, quote, ease the U.S. into what Trump calls Liberation Day. But others are less worried about an economic shock, echoing Powell's sentiment. That includes Bank of America CEO Brian Moynihan, who spoke with CNBC yesterday.
$1.5 trillion will go out of our consumers' accounts in the economy. It's going at 6% more will go out this quarter than last year, round numbers, and that means it's solid. And I think that sets up what Candace Browning Platt and her team see in the research, is they don't see a recession, but they continue to consider the tariff impact on GDP, and they'll keep reflecting that. But they don't see recession. They see inflation being sticky, and the Fed's going to hold rates.
And joining me now is Moody's Analytics Chief Economist Mark Zandi. Mark, good morning. Good to see you.
Good morning, Frank.
All right, so we've seen futures moving higher. They all off of their highs of earlier, but higher across the board right now. I want to ask you, has something fundamentally changed? Investors seem to be more confident than they were just a few days ago, but still two rates, inflation sticky, the Fed actually lowering its growth outlook. Has something meaningfully changed to the upside when it comes to the economy in your mind?
No, market goes up, goes down, goes all around day to day. I don't think it's gone very far. I mean, it's still down quite a bit from where it was a few months ago. The tariff war is still on. Uncertainty continues to prevail. All the sentiment indicators coming out for consumers and businesses remain very iffy, very dark. So no, I think if the tariff goes in as the president has articulated them, reciprocal tariffs, broad-based in early April, and they stay there, it will do a lot of damage to the economy and the stock market. If the president doesn't do that, the tariffs kind of fade away. I'm not sure how that would happen, but if they were to fade away, I think the damage would lessen and the economy would be just fine. So no, I don't think anything fundamental, Frank, has changed.
All right. I thought it was kind of interesting that Jay Powell said, according to the survey data, he hasn't seen any significant weakening of the economy, but we're hearing a very different story from business leaders. I want to play two takes on tariffs from business leaders that we've heard from. Moments ago, we heard from the CEO of Wix, and yesterday from former Tesla president John McNeil. We're going to play both sound bites to get your take.
It definitely creates a short-term volatility, and small businesses at the end of the day are the ones who are impacted first by anything that changes in the market, for better and for worse.
The uncertainty around tariffs is the real challenge, because in a long-term capital business like automotive, where it takes years to build factories and billions of dollars, those kinds of production capacity and challenges don't resolve themselves in weeks and months. They take years. And so the uncertainty here is I think what everybody is hoping will get addressed.
So Mark, your take. Again, the Fed taking a wait-and-see approach, but we continue to hear from businesses that these tariffs are creating a lot of issues for them.
Yeah, I mean, I think what the Fed's doing is right, because it doesn't, Fed officials don't know how this is all going to play out. And it's not, Frank, it's not just about the tariffs, it's about other economic policy. It's about the DOGE cuts to jobs and to funding, it's the fiscal policy, there's a lot of discussion about tax and spending. There's the Treasury debt limit coming up, and that goes to some of their decisioning around winding down their tapering. So there are a lot of moving parts here, and given that, I think it's wise for them to sit on their hands and wait and see how this plays out a little bit. But you can see the damage that's accumulating. It's not existential or anything. The economy came into the year exceptionally strong, so it could weather a lot of storms. But we're getting some pretty big storms, and as long as those storms are raging, the risk is that something comes undone here, and you can hear from those business leaders, and it's across the board. They're very nervous and worried that if this continues, the trade war continues down the path it feels like it's going down, and the uncertainty around other economic policy remains in place, it's going to do real damage, and ultimately will result in them getting off their hands and cutting jobs and investment and pushing us into recession, and that's why. Recession risks are less than even. I agree with that. I think that's the general consensus, but they're definitely up and they're moving in the wrong direction.
So Mark, one other part of the Fed decision yesterday was the Fed's decision to taper its quantitative tightening. You called that a surprise, and you say that it signals that the Fed is nervous. What do you think the Fed's nervous about?
Yeah, modest surprise, and we knew they would start to wind down their tapering. I just didn't expect it this quickly at this meeting, and they made it pretty clear. I think they're nervous about the Treasury debt limit battle that's coming up, and what that means for how much cash the Treasury has on hand, and what that means for reserves in the banking system. And I think they're really, and rightfully so, nervous about what it all means for short-term funding markets. There could be a lot of volatility in short-term interest rates, and they would like to avoid that, obviously. And so I think by beginning the tapering sooner rather than later, they hope to ameliorate those issues.
Wait, Mark, can I ask you a very quick question because we almost have to go? So if the Fed can take action because they're nervous and anticipating something happening in one area, why can't they do that when it comes to tariffs and perhaps proactively cut rates? I mean, why not take that same approach when it comes to rate cuts?
Well, I think in the case of the tariffs, they're in betwixt and between. There's uncertainty not only with regard to growth, but there's also uncertainty with regard to inflation. So if inflation ends up being higher and more persistent, inflation expectations run up, then the policy response is very different than if the economy weakens and inflation slows. And transitory. So in that case, the uncertainty is not clear which way it cuts. Should I be more aggressive with rates or less aggressive? With the case of the wind down of the tapering, that's just much clearer. The risks there are just more one-sided.
Okay. Mark Zandi, we got to leave the conversation there. I think a lot of us could talk about this all day. Mark Zandi, always great to have you. Thank you very much.
Sure. Anytime.
All right, coming up here on Worldwide Exchange, shares of Kava taking off with one bank signaling fresh appetite around the fast casual chain stock. Taking a look at shares, they're moving up just about 4% in the pre-market. Many more details. Worldwide Exchange returns. Stay with us.
4310.
And welcome back to Worldwide Exchange. Take a look at U.S. stock futures off of their highs of earlier this morning, but still in the green across the board. The S&P up fractionally, NASDAQ up fractionally. Looks like the Dow would open up just about 40 points higher. All right, take a look at this morning's call sheet. Piper Sandler cutting its price target on Tesla from $500 down to $450. Piper citing the EV makers forward PE for the move, but says its upcoming robotaxi launch and potential product unveilings, they could provide some fresh catalyst. Shares of Tesla just fractionally lower right now. JP Morgan upgrading its rating on Kava to overweight. JPM is recommending taking advantage of the pullback in that stock and says near-term initiatives will help drive sales and profits. Shares of Kava, as we've been highlighting this morning, they're up just about 4%. All right, time now for your global briefing. China's central bank keeping its key lending rate unchanged. In its latest policy decision, those rates have remained unchanged since October's quarter-point cut. SoftBank also announcing it's buying Ampere for $6.5 billion, the deal for the U.S.-based chip designer, which counts Oracle and Carlyle Group as early backers, marks the latest push by the Japanese conglomerate into AI infrastructure. All right, coming up here on Worldwide Exchange, we have the one word that every investor has to hear today and the stock pick that every investor needs to know. Plus, two key earnings reports today with Nike and FedEx, both stocks in the red since their last results. We're going to tee up the numbers you need to watch when Worldwide Exchange returns. Stay with us. All right, welcome back to Worldwide Exchange. FedEx shares, they've underperformed the S&P and the Dow Transport since last earnings due to concerns over tariffs and an economic slowdown weighing on the stock. Revenue is expected to increase by just about 1%, while profits expected to grow by about 18% year over year. The key metric to watch, that'll be guidance. FedEx lowered its full-year revenue and profit outlook last quarter. This time, the numbers and commentary will be seen as they read on broader economic activity here in the U.S. and also globally. FedEx has exposure to the consumer and its ground e-commerce business, exposure to business spend and international trade through its express division, and exposure to manufacturing and industrial through its freight division that does LTL trucking. Another number that could move the stock, the estimated savings from its Drive cost-cutting program. FedEx is guided for $2.2 billion in savings this year. Nike also reporting its results after the bell today. The stock's down more than 4% since its last report. The apparel and sneaker giants expected to post its sharpest revenue decline in roughly 5 years on signs of consumers pulling back on spending on non-essential items like sporting goods and clothing. For much more, let's bring in Matt Powers, managing partner of Powers Advisory Group, which is a Nike shareholder. Matt, good morning.
Morning, Frank.
What are you expecting for this report? New CEO coming in, trying to do a turnaround plan. Where are you expecting to see growth? Where are you expecting to see continued weakness?
Yeah, being direct, we're not looking for great results in the numbers. I mean, the bar's already set low. We're not saying we don't think they'll be good, but we're more interested in seeing some progression on the rebuilding of the brand. I mean, the first step in a turnaround is acknowledging issues, which they've done, then taking action, then executing on those actions. It appears we're in that action phase right now. I mean, everyone knows how we got here, but it's kind of worth mentioning again real briefly is just some poor management, lack of adjustments when needed the most. They pushed to that direct-to-consumer, and they moved away from some of the retail relationships like Dick's and Foot Locker, and they allowed competitors to enter those spaces. In the meantime, there was a lack of innovation and too much reliance on these retro traditional styles. Last year, Elliott Hill took over. He's got a clear turnaround plan, and he's been very transparent in that turning the ship around will take patience and just don't expect immediate results.
All right, to your point, stock's down about 27% over last year, so it's quite a turnaround plan. I want to ask you one other thing. We're trying to figure this out in the market. Are you trying to figure it out with Nike? Has the bottom already come in? Is this an opportunity to buy? I know you're looking at the forward PE of Nike. I think we have different numbers than you have, but right now Nike trading at about 40 times forward PE. Is that an attractive valuation for this company? And I also want to point out some competitors in their forward PE. On Holdings that makes the On sneakers just about 40, Under Armour at about 20, Decker's less than 20. So is this an attractive PE when it comes to Nike?
It's a great question. It's you look at On, you look at Decker's, you look at Nike. They're kind of same category, three different types of companies. It's obviously On's in heavy growth mode at this point, and we initially liked Nike because their dividend and their growing dividend payout, which is an all-time high, but with Nike, it's internal. And again, turning around something as massive as this is just going to take time. And I mean, that's why we're looking to see where they're at in the process. But, we see inflation will eventually stabilize. Nike will adapt, and we expect it to regain some dominance here. We don't think investors should make a quote unquote trade ahead of the call, but I do think any time in the near future would be a decent entry point into what we believe is a long-term holding.
By the way, Decker's makes the Hoka sneaker brand. For people who think we're comparing Nike to boat shoes, this is the Hoka sneaker brand we're really talking about.
Correct. Yes.
Matt Powers, always great to see you, man. Thank you.
You too.
All right, coming up here on Worldwide Exchange, the slice of the market. Our next guest says valuations that are looking much, much more reasonable. We'll be right back after this break. Stay with us. right, welcome back to Worldwide Exchange. We're closing on the 6 a.m. hour. Check on a few stories that we're following this morning. We're watching shares of Tesla, NVIDIA this morning. They're on the move after the nearly 2% pop yesterday. CEO Jensen Huang telling the FT his company plans to spend several $100 billion to source U.S.-made chips over the next 4 years, including those from Taiwan Semi and Foxconn. This coming after Huang shared his vision with our Jim Cramer on Mad Money last night on the trillions still yet to be spent.
The world's computing capex, it's on its way to $1 trillion annually by the end of the decade. So we're fairly certain of that. We're also very certain that the vast majority of that will be used for AI. And so our opportunity as a percentage of $1 trillion by the end of this decade is quite large.
And on DeepSeek, Jensen Huang adds, understanding of its R1 model are just completely wrong, telling CNBC the compute power for the China AI startup is much larger than first thought. Reuters is reporting that CoreWeave is eyeing a $47 to $55 per share price target for its IPO. The report says that price range for the NVIDIA-backed AI startup would result in a $2.3 to $2.7 billion offer. Turning to Washington, the White House says President Trump will sign an executive order today to close the Department of Education. Formally closing the department requires congressional approval, but the Trump order will likely make it nearly impossible for employees to carry out their work. And shares of Five Below, they're rallying this morning after the discount retailer reported a smaller than expected drop in same-store sales. The company's profit outlook for the year, that missed estimates, but the midpoint of its revenue guidance was above analyst expectations. Shares of Five Below up just about 12% right now. All right, futures are moving higher right now in the pre-market after the Fed decision, but notable. Well off their highs of earlier this morning. For much more, let's bring in Gina Sanchez, CEO of Chantico Global and a CNBC contributor. Gina, good morning. Good to see you.
Good morning.
What do you make of the futures higher, but just kind of falling well off their highs over the last half an hour or so?
So, look, I think that there was definitely a sigh of relief, particularly with Powell's comments. You know, the idea that, yes, the odds of a recession are going up and that inflation pressures are certainly rising, but Powell's comments basically suggested that, you know, that whatever inflation comes off of tariffs would likely be temporary, and that there is no real concern among the Fed that we're going into an extreme recession. Now, all that said, we still aren't out of the woods. If you look at S&P multiples, I think that they've gotten very reasonable. If you take out the Mag 7, which are really being driven by a whole set of, you know, secular stories that I think, you know, we can agree will still remain regardless of what happens in this short cycle, in the cycle that we're in right now. The majority of the S&P 500 is actually really attractive. But as we're going into what is very likely going to be a recession, at least a mild recession, with the potential that it could be worse than that, I think the markets are going to climb the wall of, or if the markets do go up, it'll be climbing the wall of worry all summer.
So, Gina, I'm just going to backtrack a bit. You said sigh of relief. Relief's actually your word of the day. But then I just want to go to what you just said just a second ago. Do you think we're going into a recession?
You know, I think we're likely going into a recession, at least a mild one, and not for any reasons that have happened in the last few weeks. This has been in the making for, you know, over a year, in the sense that, you know, we have seen consumers at the end of what they can spend, you know, in terms of, you know, credit card spending, in terms of wage growth. There are lots of things that suggest to us that the consumer has been tapped out for a while, and it would take some time to manifest. And I think that time is coming. So I don't think we can avoid that. So the question is it a mild slowdown or is it a recession?
Okay, so if you think that we could be facing either a mild recession or just a full-blown recession, whichever way you want to look at it, I don't think there's any such thing as a good recession. What areas of the market do you think are attractive in that scenario?
You know, I think that we've been defensive. We've certainly been defensive, and we do care about valuations. And there are a lot of changes that are happening. I think one of the challenges for anyone is that pattern recognition right now is out the window because so many regulations are changing. So, you know, to sort of answer your with a non-answer, I would say that this is a stock pickers market, not sort of a broad sector market. And so, you know, we're looking for things that have attractive valuations and have defensive earnings. But every day we hear new kind of stories about regulations that are changing, that matters. And so I think every stock is going to act. I think we're going to see a lot of dispersion in the last half of the year.
All right, so you mentioned it earlier. I know one part of the market that you're looking at, or actually one way to invest, is the S&P equal weight. Our Mike Santoli pointed out, I think you're pointing this out too, if you actually subtract the Mag 7 from that, the S&P would actually be, or if you subtract the Mag 7 from the S&P, it would be positive for the year. The equal weight, what do you think it gives you that you just don't get from the regular market cap weighted index?
Well, it simply gives you less exposure to the really, really big Mag 7 who are massive in terms of their impact to the S&P 500. But it also sort of it gives you more exposure to some of the smaller, companies that you might not otherwise get exposure to in the S&P 500. Okay. In a market like this, like I said, there's going to be a lot of dispersion, so it's going to be really, really hard to invest broadly.
All right, Gina Sanchez, we got to leave the conversation there. I'm sorry to cut you off.
All right.
You have a great day. Always great to see you.
Thank you.
All right, here's with the wash today. We get initial jobless claims and existing home sales figures this morning. Also earnings, as we told you before, from FedEx and Nike, also Lennar, Micron, and Darden Restaurants. And then at 7 a.m. Eastern, we get another central bank policy decision, this time from the Bank of England. One more look at futures. I actually don't know if you guys were watching. We saw the futures actually just flash very briefly to the red. Right now, kind of a mixed picture. The Dow turning negative. The S&P and the NASDAQ just fractionally higher right now. That does it for Worldwide Exchange. Squawk Box starts right now.
Good morning. The futures are mostly calm after the Fed held interest rates steady. That decision not sitting well, though, apparently with President Trump. He's calling for the central bank to cut rates, but we did see the 10-year on its own. The yield falling a little, down about 320 or so, 322. NVIDIA's CEO says his company is ready to spend hundreds of billions of dollars on equipment in America over the next few years. That's that news capping a whirlwind few days of announcements from the AI giant. And let the madness begin. College basketball's race for a title, well, this is not exactly right. It actually began yesterday and the day before, especially yesterday, with the Xavier Musketeers beating the SEC team, Texas, with an unbelievable comeback from down 13 points. Billions of dollars are on the line for bettors. It can, a decimal point going out about 10 places is mine for that. It's Thursday, March 20th, 2025. Squawk Box begin trading. Good morning and welcome to the Fast Money / Squawk Box program.
For acknowledging.
It's going to have a Fast Money sort of an aura, as it usually does. She agreed to come back again. I don't know what it took. Melissa Lee is here. We're live on CNBC from the NASDAQ market site, which you know pretty well. Mm-hmm. This is down one floor. This is all really
the upper level.
But you are. You're above us. You are above us in so many ways. Melissa Lee, Becky, and Andrew are off today. Equity futures at the Desire, you just heard Frank mention, they did turn negative. It had been slightly positive, now down fractionally across the board. Treasury yields as well, following yesterday's decision by the Fed to hold interest rates 4.22 now. Holding steady, the Fed kept its forecast for 2 rate cuts this year, but said uncertainty around the economy, the outlook has increased, and in a post on a social media network last night, President Trump said the Fed would be much better off cutting rates as U.S. tariffs start to transition. It's kind of interesting, or ease their way into the economy. Do the right thing. April 2nd is Liberation Day in America. That's when a new round of U.S. tariffs on other countries are scheduled to go into effect. We have more on all this with former Fed Vice Chairman Roger Ferguson in just a few minutes. I mean, there's some that could happen. It could happen that you combine Doge with the effects of the tariff, and it might make sense. I asked someone yesterday, I can't remember who it was, Alan Blinder, I think, who knows a lot about the Fed, obviously, about whether, given the outlook for what these policies could do, is the Fed too restrictive right at this point? You could probably argue
you can
that
definitely make that case.
Except that Powell yesterday was very clear that he believed that this inflation could be transitory, and
Yeah.
that would be the base case. That is the base. I know, and so when he
said that word.
I was a little surprised that the markets really took the whole message in stride, considering the last time he used the word transitory,
Yeah.
it was really when they lost a lot of credibility initially in their fight against inflation.
Do you think people watch every day?
Watch
Yeah, I think they do.
the NBC.
Yeah, but I'm going to do it anyway. This was my imitation of Jay Powell. And his recent, remember that interview recently?
Yes.
He's like this. Yeah, we raised rates, took them down, orchestrated a soft landing. Things are pretty good. I mean, the economy is really even in, and we may or may not do something, but it's not based on us now. It's based on exogenous things. We've done our work. Now we're going to sit
Don't you
back.
agree that the
I
economy
agree
has,
totally.
has,
But
you know,
he's in a
stuck the
really good
landing in the
no.
end, even though
He
transitory
was
a
joking. He was relaxed. He was at that interview, and I would be too, because at this point,
He's off
anything
the
that
hook.
happens
He's
is
off
not
the
going to be
hook.
his fault.
Except that he has to manage the policy.
He does, but that's,
Afterwards.
wouldn't you rather do that than managing yourself, your own mistakes? You'd rather manage
It's
the
true.
policy.
You can point. You can
Right.
point the blame
He's
at somebody
done
else.
it. He's looking back at it, and you know we've been waiting for something to dispel the notion that he orchestrated the soft landing. I'm almost ready to say, I'm not mission accomplished. We've learned our lesson, but I'm almost ready to say that they successfully managed through that. Look at the last 8 quarters, what GDP was, or the unemployment rate.
It's only in the past month
Where
or
there's
so,
doubts.
where there are doubts.
But I don't know if
But
the
they-
doubts are, I
but-
don't know if they're real yet.
Right. I mean, soft data. He called the UMich survey
Yeah.
outlier.
Right.
You know, he's really dismissing the soft data, saying the hard data still shows the economy is solid, and that's why the markets rallied 1% across the board.
Did you fill out a bracket?
I don't know anything about
Because
brackets.
you just said University of Michigan, and I took them a long way. I think they are, and they'll probably lose, you know, in the first one. I don't know, but I think they're, but anyway, you said University of Michigan. My mind immediately jumped to that, so
What are you
I'm
talking
sorry.
about?
I know, I'm sorry.
NVIDIA is one stock that rallied yesterday. NVIDIA CEO Jensen Huang says his company is set to spend hundreds of billions of dollars on chips and other electronics manufactured in America over the next 4 years. That's according to an interview Huang gave to the Financial Times. In it, he also said NVIDIA is now able to produce its most advanced systems in the U.S., partnering with Taiwan Semiconductor and Foxconn. NVIDIA coming off a day in which its CEO made a variety of headlines at the company's GTC conference in California. Huang said orders for more than 3 million flagship Blackwell chips from 4 top cloud providers actually underrepresented demand. He expanded on the demand the company is seeing later on CNBC's Mad Money.
The world's computing capex, it's on its way to $1 trillion annually by the end of the decade. So we're fairly certain of that. We're also very certain that the vast majority of that will be used for AI. And so our opportunity as a percentage of $1 trillion by the end of this decade is quite large.
The NVIDIA CEO made a number of other headlines. He said NVIDIA sees only a little short-term impact from President Trump's tariffs. And on Chinese AI startup DeepSeek, Huang said fears that similar models wouldn't need to use as much computing power. Those beliefs were misplaced.
Really pretty interesting. I got to catch parts of the interview, and about the tariffs, he said, look, we're already onshoring. We're going to be, within a couple of years, we're not going to think about tariffs at all. And it's like, that's the idea, I think. But he said, we're talking to TSMC, talking to others,
Right.
to start building everything here. And I saw one of the, he calls it a chip. I mean, it's a freaking, it looks like a laptop almost. They're so big, there's so much going on.
So
and it's just, and it's mind-boggling to me. The architecture, the electronics that are, it's not even electronic, I don't even know what it is. It's
Circuitry.
Thank God for electrical engineers who, they let us all, like, maybe not you, but they let us all sort of screw around in undergraduates. You go out at night and, you know, while they were nose to the grind, they had to be nose to the grind. So you take any engineering, well, did you take any engineering courses at Harvard ever?
No.
I barely touched on the surface and realized, no way. It's very, thank God for that. Thank God for that. Look what the world is turning into. Well, that's, they'd all, you know, be displaced by robots, but
Including electrical engineers.
includes, yeah, they'll be out of here too. Japanese conglomerate SoftBank says it will buy semiconductor designer Ampere Computing for $6.5 billion. Carlyle Group and Oracle have both committed to selling their respective stakes in Ampere. The company will operate as an independent unit of SoftBank and keep its headquarters, though, in California. In a statement, SoftBank CEO Maya-san, what do you call it?
Masayoshi-san?
Yeah,
Masa-san?
Masa-san. That's what Andrew. Yeah, he always because it sounds like he.
That's so disdainful.
No, it's because it sounds like he knows. It sounds like he knows it. He always says that. So I haven't met him. Andrew does know. So it's like Masa-san this, Masa-san. Anyway, Masa-san said, I want to do it. Like I do know him. I know. Masa-san says the deal will deepen his company's commitment to AI innovation in the United States. SoftBank expects to close the deal in the second half of this year.
President Trump is weighing a reversal of his recent decision to order Chevron to stop pumping oil in Venezuela next month. That's according to the Wall Street Journal. It says Trump expressed openness to the idea of extending Chevron's license during a meeting with oil executives and Energy Secretary Chris Wright yesterday at the White House. As part of a possible extension, the Journal says the Trump administration is looking at imposing tariffs on countries that buy oil from Venezuela. We'll speak with the Energy Secretary in an interview just after 8 a.m. Eastern Time, so you will not want to miss that.
I think we should fill the SBR, refill it
At
this
these
price?
levels, yeah.
Not at 50. Drill, baby, drill. I'm not
You
calling.
can ask
not,
that.
not calling you baby, but if you
No,
drill, baby.
you never do that.
No. Coming up, the signal. Oh no, I'm messing with you. Signal from the noise. Okay. Remember Chef Smith? That's what he was doing.
Signal from the noise?
Yeah. Instead it was almost all noise. From the Fed, we're going to ask former Central Bank Vice Chairman Roger Ferguson about the most important thing he heard from Jay Powell yesterday. Stay tuned. You're watching Squawk Box on CNBC, where you're likely to hear almost anything at this point.
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance, a policy.
That was Fed Chair Jerome Powell following the Fed's latest decision to hold interest rates steady. Joining us now with his top Fed decision takeaways, Roger Ferguson, former Fed Vice Chair as well as CNBC contributor. Roger, good morning. Great to see you.
Good morning. Nice to be with you.
Were you surprised at all that that Mr. Powell used the term transitory again? It almost seemed like the worst word to bring back.
Indeed, I was surprised to hear that word, knowing the history of it. I would have thought that he would have said they'd be watching the impact of tariffs very closely and prepared to act to make sure that the potential inflationary impact, if there is one, is transitory. So I was a little surprised given the history of that. But nevertheless, his overall message, I think, was balanced, and obviously the market heard what we wanted to hear.
Do you believe, as Mr. Powell does, that the inflation that we could see following the tariffs will in fact be transitory, or do they actually stick around for longer than people think? There have been a number of articles recently saying that the effects are much longer to work out of the system and could take years, not quarters.
I think there's some real risk there, partially because there's redoing of supply chains that may be underway or may be encouraged by these tariffs if they do come into place. I think the other effect is you've got to think about the background. We've had a great deal of inflation in this country. It seems to be coming down, but it's not yet at the Fed's 2% target. And finally, though not all measures are there, there are some measures both in the market and surveys that show inflation expectations are a little elevated or moving in the wrong direction. So I think it's the context that matters, and in that sense, I think the Fed and all of us have to be prepared for the possibility that tariffs, if they are put in place and stay, might create inflation that might be difficult to get out of the system. So the Fed, I think, needs to be on guard.
You mentioned the nearshoring effect, and with tariffs, it's further encouragement for companies to actually walk the walk, so to speak. And so I'm wondering, Roger, if you think that we are in for an era of structurally higher inflation, and if investors should rethink 2%. I understand the Fed wants to stick with the 2% target, but is that a reality?
Well, look, the Fed will absolutely want to stick with the 2% target. They announced that as either they talked about reviewing the monetary policy framework. I think some of the disinflationary forces that have been driving the global economy for the last 20 years, noticeably the bringing in of the hundreds of millions of workers from China into the manufacturing system, are probably behind us for sure. We also see the need to spend more on things such as defense, for example, and indeed, the redoing of supply chains, so-called nearshoring. So yes, Melissa, I am of a bit of concern that the disinflationary pressures are behind us, and we might need to be prepared for a different kind of world than most of us have lived in for the last couple of decades.
In terms of dismissing, it sounded almost dismissive, his tone, in terms of speaking about the UMich survey that was released last week, that it was an outlier. And granted, it is an outlier in terms of, that was something very different compared to what we had seen in the past. But at what point, Roger, do Fed folks think about the soft data working into the hard data?
Look, to be fair, I think they're thinking about it already to some degree. You can see that in a couple of things, though most folks didn't comment on it. The SEP, the so-called dot plots, the number of Fed officials expecting either 0 or 1 cut, not 2, doubled from 4 to 8. I think Fed Chairman himself, Fed Chair Powell himself, said that people are starting to factor inflation or tariffs into their inflation forecasts. I think he's right to say thus far the hard data on the other side have not suggested that we're having or going into a slowdown, but the Fed's own forecast showed an increase in the unemployment rate and a much lower growth rate. So I frankly think the SEP, if one looks at those so-called dot plots, indicated, the Fed is already thinking about both the inflationary impact of tariffs and also the potential slowdown as consumers perhaps rethink things, or as tariffs raise costs and make things more complicated for them as well.
Remember last time, Roger, God, it must have been a long time ago, when President Trump was jawboning Jay Powell about lowering rates. It didn't seem like the right time, but within 6 months, it's like rates were going down. It was weird. It was like you could have listened. And I'm not saying he was prescient, because he's a real estate guy. I don't know if he ever says anything other than we need lower rates. But again, I think we might, I don't know, you might disagree. I think he might be on to something again in terms of if we do see any type of damping effect of DOGE on the economy, combined with the tariffs and maybe some inflation, maybe it puts the Fed where we are right now. Wouldn't normally be seen as restrictive, but maybe given what we're going to see happen, maybe the Fed's restrictive right now, and the 10-year seems to be telling us that.
Look, well, you and I have had, the number of discussions about that the Fed is restrictive, balanced. A few meetings ago, you and I were talking about the possibility that maybe they're not at all restrictive. Look, I think we heard from Chair Powell that they are prepared to cut if the data call for it. Obviously, he doesn't want to be bullied or appear to be bullied by any outside force, including the president. But I do think the Fed is attuned to both parts of its mandate and will not cut if the data call for it. On the other hand, it's a really tough position they're in, where they're both expecting inflation to be higher than they had originally thought, expecting growth to be somewhat slower. And so it's a balancing act right now, and I think they're waiting to make a decision based on greater certainty out of this very uncertain moment.
So you remember what we talk about? I think that's interesting. So we actually have. No, I'm thinking. Have you ever been like out at a cocktail party talking to like important Fed type people and say, well, Joe and I the other day were that probably never happened, has it? But maybe you talk about.
Joe, I mention your name frequently. I'm happy to say, look, I've been chatting with Joe Kernan about this or that, and sometimes we agree, sometimes we don't.
Is it got a modifier?
My good friend, my good friend and respected TV commentator, Joe Kernan.
Yeah, my good friend.
My good friend.
I'm gonna quit while I'm ahead, Roger. I think. Thank you. Thank you for being nice.
I'm always nice to you, Joe. Thank you.
I have suggested that we have a drink. I have, just because I want to get him
one day.
I want to get him in a position where he says just totally says what he thinks about it, because he's very nice, and sometimes he'll say, I know what he's saying, but he won't say it. You know what I'm saying? Because he would be disagreeing with
the Fed.
It's like I think he's, a lot of times he's got his arguments have a lot of merit. We're going. I hear the music coming up. An AI startup backed by NVIDIA is moving closer to an IPO. New details of pricing are coming up right after the break for Coral Weavy.
Restrictions apply.
AI startup CoreWeave planning its initial public offering at a price between $46 and $55 a share. That would raise about $2.5 billion in capital, and it would value the company at around $35 billion. Sources tell Reuters the company's begun marketing that offering to potential investors. CoreWeave provides access to data centers and high-powered chips for AI workloads and has been backed by NVIDIA. Its customers include Meta, IBM, and Microsoft.
Coming up, former New Hampshire Governor Chris Sununu and former Commerce Secretary and White House Chief of Staff Bill Daley will join us on the latest tariff and political headlines. And college basketball's ultimate party is tipping off. Get your brackets in. After a break, how much money is on the line and the odds of picking that perfect bracket. We'll be right back.
Warranty.
Good morning. Welcome back to Squawk Box. We're live at the NASDAQ market site in Times Square. Let's check the futures. After we had that rally yesterday on the back of Fed Chair Powell's comments on the economy, saying it's in solid shape right now. That's what the data looks like. We are seeing a pullback a little bit in the pre-market. S&P looking to be lower by about 40 points. Dow looking to give up 253. NASDAQ looking to be down by about 160 points. These losses really extended in just the past 30 minutes or so. We are watching some big pre-market decliners in the S&P 500. Take a look at them. Microchip down 5%. Tesla is down 1.8 after a big rally in yesterday's session. GE Vernova down by 1.4. Astra Treasury is fairly stable. The 10-year at 4.2221% right now, and we got the 2-year at 3.955.
Not long to get Melissa to get your brackets in. Can you have a question?
I've never done a bracket in my life.
Today I don't have anyone to talk to about basketball and sports.
I'm sorry to
because Becky's not
fall
here.
short of
Because
your
Becky's not here. Normally I can talk to her at least about it.
I can leave.
No, I was making a different point. I joke about this. You know, the NCAA men's and women's college basketball tournament, I will help. And you can always just press automatic.
I'll just go
On
to
your- on your-
ChatGPT and say, give me a bracket.
Press automatic on this thing. You can get them all. Tips off today. The 4 number 1 seeds in the men's bracket. Auburn, I don't know. Florida, definitely should be there. Duke and Houston, all those I might take to the end. Teams are going to play the first 2 rounds of the tournament today through Sunday, making their way to the national championship game. That's on April 7th. The American Gaming Association estimates people will bet $3.1 billion on men's and women's games over the next 3 weeks. And of course, the annual reminder that the odds of that perfect bracket, 1 in 9.2 quintillion.
Wow.
Warren Buffett telling the Wall Street Journal he wants to give away some money this year during the tournament. Berkshire Hathaway's can win $1 million. Oh, okay, now if they correctly predict 30 out of 32 winners in the first round. And I said for a while, come on, Warren. It used to be a perfect bracket, though. $1 million, if you get a perfect bracket, ought to be $1 billion, minimum. So now he's changing that a little. He goes to 30 out of 32, which is a little bit better.
Better, yeah.
He's a Creighton guy. I see so many Big East games that I think St. John's has a chance. I would take Marquette for a while. Xavier's in. UConn, you could never count
So
out, right?
this so-called bracket.
I'm in the process of doing it, actually during the show.
Oh, that's nice to know. You're during the interviews?
Yeah. After I ask a question, I go back to it and think. And no, I need to ask a follow-up. I need to listen to the answers.
Yeah, and then that's when you point to me and say,
Yeah, sometimes I need to listen to the answers.
All right. Coming up, a political pairing you do not want to miss. Former New Hampshire Governor Chris Sununu and former Commerce Secretary Bill Daley will join us on the Trump administration's latest tariff plans and the fight to cut government spending and federal workers. Plus, later this hour, tennis legend Stan Smith will join us, the namesake of Adidas' best-selling sneakers. We'll talk leadership, a contentious lawsuit roiling the tennis world, and much more. We'll be right back.
Terms and restrictions apply.
Oh my God. Were we rolling on that? We have.
We're on tape.
Yeah, good. We have two special guests on
We'll
set.
edit that out.
Joining us now for a conversation on the Trump administration's tariff plans, government cost cutting, and more. Former Commerce Secretary and White House Chief of Staff Bill Daley, and former New Hampshire Governor Chris Sununu. I guess I'll start with you, Bill. It's a tough period for American politics, I think, right now. Oh, I asked this question yesterday of Senator Welch from Vermont. I said, it's just so acrimonious, the two sides, and what's going on, and they just can't seem to get together. And I said, I'm not talking about Republicans dinner, I'm talking about Chuck Schumer and the rest of the sort of the, what do we call those people? The AOC and her friends, what do we call them? The squad. There's some dissension in the ranks in the Democratic Party itself.
Well, there's a lot of dissension in America. There has been for the last couple of years politically.
What do you think of
for
it?
a number of years.
Yeah.
It's not just the last 50
I
days.
mean, it's much worse now, isn't it?
Well, we've had close elections since 2000. We had an election in 2000. Most of them are very, very close. This was, even though the president won a decisive victory in the sense of winning those 7 states, he got less than 50% of the vote. Harris was like,
I think Clinton got 42%.
Yeah,
Okay?
no,
That's
I know,
difficult.
but we have had a divided nation for a long time.
Right.
And it's getting bitter. Social media has added to it. It's made it much more
Right.
toxic. And
But Bill, that
not
dog
good for it.
does nothing. He won all 7. He also won the popular vote. He also won the Senate. He also won the House. So
He
you got,
won.
it was a
He
drubbing. You're at
won.
25%. You're at
He's
25.
not saying that he didn't
I'm not
win.
saying that.
I'm doing Chris's work.
Okay.
You're at, Democrats are at 25%
Right.
approval.
And Democrat and Republicans are what? At
44%.
Yeah, but
Right
as a
track,
party,
wrong track, he's
as a-
44%.
That's the president. I get it. He's
Okay.
50 days into his term. He should be in a strong position.
Oh, help me, Chris.
I'm not.
You guys got along out.
yeah.
You guys got along
I get
out
along
there.
with everybody. So look, I would argue this. I think the Democrats, you're not sure who the real leadership is there. They got to figure that out. They're not even sure what their message is going to be. But Republicans shouldn't think that this is going to last very long. They are going to eventually get it together, so we can't take that for granted. It's about running good races and having good policies. It won't all just be dictated by the president. I think we are going to hit a soft recession here at some point. How the tariffs play into things politically, that's the big story. If anything, if there was any story from Powell yesterday, it's I took it as much more negative than most people. I think he just doesn't want to fight. When you see the bank reserves going up, but he's going to slow the runoff of treasuries. When you look at the fact that, we might do some rate cuts, but not right now, but we think it's going to have inflation. By the way, whoever is his communications person, stop saying the word transitory. It's the dumbest word in his lexicon.
Might be right.
I think he's scared to death about the realities that are going to come. The key for Republicans, as in any political sphere, messaging. How are you going to message this? So whether it's tariffs, Trump needs somebody else to message it, not Peter Navarro, by the way. He's more of a zealot, right? You shouldn't have zealots messaging for you, but
Bill, in terms of 80-20 and taking the 20% side, that's one of the criticisms of Democrats right now. Do you see any benefit to Doge at this point? And do you think
I see a benefit to.
Is it being done wrong? Is that all you fall back on? Because
Well, that's a big deal. I mean, I proposed. President Obama proposed at my encouragement asking Congress for a reorganization authority, which Democrats took away from Ronald Reagan in the 80s, so that you could present an actual plan of reorganization of the federal government. Don Rumsfeld once, in the 80s, recommended 4 major departments. That's it. And Democrats, quite frankly, wouldn't give Obama that authority. There's a way to go about this. I just spent 5 years with Charlie Scharf, a company that 5 years ago was viewed as the most inefficient, bloated, too many employees. He went about a process to do change that has made major change. There's different ways to do it. You take a chainsaw, you don't normally see the results in a way that's
if I may, Bill,
important.
isn't it realistic to say Republicans and Democrats in Congress have done nothing for 25 years, right? And there's a way to go about it, but it hasn't happened for so long. So I think Trump is saying, look, if you guys aren't going to do your job, we're going to do it fast, we're going to do it hard.
But nobody's encouraged them to do it. No one's encouraged Congress to do a real
The American people haven't encouraged them to be fiscally responsible.
$37 trillion.
Fiscally
But
responsible is different.
It's weird for the Democrats to take the position that keep talking about transparency of the process of looking at government spending, without any interest in looking at the transparency of the government spending and the bloated nature of it and the waste and the fraud and everything. They're talking about the method of trying to rein that in. They don't even want to look at what caused it. And it's very weird to me to see that. And it's gotten to the point where one of the most beloved businessmen and what our Thomas Edison who just brought the astronauts down, just because of who he is and what he's trying to do, sleeping in the office at night, not doing his own stuff. The richest man in the world is trying to do this for us, and we're firebombing his dealerships and not a single Democrat has spoken out against it. You want to speak out against it right now?
Yeah, I'm against any violence against anyone or any business. Okay, there are people that go out and firebomb energy companies or oil companies. That's all. It's against the law. We ought to prosecute people who do that. The political parties don't support that. I surely don't.
No one said anything. How about the former vice presidential candidate saying, you want to get in a good mood? Maybe Tesla stock can go to 0. And I don't know how many employees own it, how many retirement plans. They got 80,000.
I know it's shocking to hear that politicians say things that are outrageous. I know that's strange.
That's a little beyond the...
Okay. Well, I don't have I could come back.
Okay, like
pretty
what?
good list of your friends who say pretty...
Really, like when Schumer said that the Supreme Court justices are going to have some comeuppance and better pay for what they've done? They're going to... You see that?
Yeah.
Okay, what's the best one you got on the other side?
I don't have it right with me, Joe.
But it's not,
I don't do this for business.
I would say this, right now the American people want to know that go to their job, take care of their families, a little question about what's happening. Yeah. I don't think they're paying attention. I really don't. They say Doge, they're going to cut some stuff. Let's see how it affects me and my family ultimately.
So you go out here and ask people what Doge is, they won't even know.
And the story of the day is also education, right? I mean, he's going to sign an order today that gets rid of the Federal Department of Education. I think it's a great move, by the way. Not getting rid of education. It's empowering the states. It's empowering parents. It's empowering localities.
Governor,
to have more control.
how does a president do away with a agency? And I'm not saying that he shouldn't. It shouldn't happen. That Congress created. So by executive order, he's able to. I could see defunding it.
Yep.
I mean, just cutting it back to nothing and not having it operate as they've done with CFPB, which I don't have a big problem with. But
and that's what the order will do. The order will basically have the secretary roll it out maybe over a year. Congress has to, almost everything Doge does, Congress is going to have to follow on the back end. And as you guys know, I'm a preacher. You know, if Trump is going to go through all this effort of trying to balance a budget and get us responsible, he needs a balanced budget amendment. It's the only thing that codifies this for eternity. It's the kryptonite to socialism. It kills the deep state forever. So they're going to roll all this stuff out, whether it's decentralizing government, whether it's the efforts at Doge, empowering states and localities to have more control. But you're right, it does have to be backed up by Congress. I think Congress is going to get there.
But if Congress changes in 2 years, that's a big problem.
That's why Doge has a time limit of January of 26. Doge isn't eternal.
No, but if they have to go to Congress, if they have to go to Congress, then as you say, to then ratify what the president does.
Can I start on you? I want to start on you.
To be fair.
To make it look good. I agree that some of these judges might be activists, but this is the only system that we have. Right now, I don't know about the turning the plane around midair, whether you needed a written versus an oral order, but things kind of break down if you override, we got the judiciary, we got the executive branch, and we have Congress. If you take one out and just arbitrarily...
Well, that's the argument. Is it the executive branch overriding what a judge said?
I know.
Is the judge kind of trying to do, or is it a judge trying to take executive action over what a president's authority?
Who needs to decide that? The Supreme Court?
Here's the answer to all this, and no one has the courage to do it. There's judge shopping. Right, when this was brought to court, they brought it right to that.
That's the system we have.
It's awful. Right. And now Congress could fix that tomorrow if they wanted to, by the way. Just pass a law that says you're going to randomly pick a judge. Conservatives abuse it, liberals abuse it. How about we just have a random lottery system where...
Are we even
that may be so rational it will never happen.
Are we even yet? We're not even yet. So you pick on poor Canada, all right? They do have some tariffs, admittedly, but a lot of it's USMCA compliant, and you've used the fentanyl where almost all of it comes from down here. So it's not, I mean, it looks like almost like a red herring for a while they're doing it. And the people that could end up hurting the most are the companies are maybe our own.
Yeah, look, I'm a free trade guy. So I'm not a big believer. If you're going to create a tariff war to get to zero, that's one thing. You're going to fight a tariff war to get better international policy, and I think he's doing that, especially with Mexico. It's working. If you poll folks in Texas, they love what's happening on tariffs because they see the border closing, they see the extraditions back to America actually happening. In Canada or New Hampshire, where I am, they don't understand it. We need their softwood, and we do need their energy. It's where I disagree with the president. So there's got to be an end game, right? Good politics, as Bill knows, is you have to have an exit strategy. It's a business decision. If this doesn't pan out, if only a few of the dirty 15 countries pre-negotiate out of tariffs, if it goes on too long, if you don't get what's going to be your exit strategy? And I hope the White House is thinking about that right now.
But the tariffs have nothing to do with the border being shut down. But I think what's happening, you see it in Canada, you see it in Europe, the politicians who are fighting the president's very aggressive tariff language and the language around trying to straighten out the relationships in his opinion, all those politicians are getting much more popular. Carney party, no way were they going to win 3 months ago. No way. The president of Mexico is more popular than she's ever been. In Europe, the same way is going, the same thing's going on. So I think those people who think all these countries are going to cower when they get into tariff negotiations with the U.S. are wrong. Right now, we are
Panama, Colombia, even
Panama,
Mexico.
I mean, Panama.
Extraditions that no president has been able to get out of Mexico are literally started happening yesterday.
You think he got
the threat of it? Absolutely.
Okay, now we're talking. Go
Absolutely.
on.
Yeah. Well, that's where the fentanyl thing comes in.
Yeah.
Going after the cartels the right way really comes into play. So it's all political at some point. But you need that exit strategy. They need a better messenger. If only Trump and Caroline Leavitt, and I love Caroline Leavitt, I think she's fantastic. But if those are the only two messengers here, that's Elon's problem. What Elon is doing is great. He needs to be partnered with a more politically
So you
savvy
would
messenger
actually
in what they're doing.
go out of the state to pick a basketball team because you don't like those preppies at Yale.
I definitely don't like those preppies at Yale.
So you would
I'm
take
from MIT.
UConn.
I actually believe in working.
Oh, the
hard.
Beavers. Yeah, I went there too. Yeah, they have great teams. They're like,
best thing we got-
they're like clubs. You know who Xavier plays next?
No.
Illinois.
A good game. Illinois is a good team.
Xavier is like a small little, Jesuit school.
Yeah,
in
great school.
Beat Texas, great school. I know. I went
You
to
feel like
St.
they have
Xavier.
Jesus on their side, and is that the?
I went to St. Xavier High School, which was the under.
How was your
And I
basketball
went to
team?
Ignatius.
Great. I wasn't on it, believe me. Believe me. Illinois has been pretty good.
They're pretty good in football too. They've come back.
They have.
Yeah, they were out for a long time.
Well, this year, he didn't really.
Well, one thing we know, you know who's going to do really well this week? DraftKings. DraftKings is going to do phenomenal this week.
You know-
$3
Stop
million.
picking.
They're
Crazy.
I've got those two and Fanatics. They're fighting over me. And so I mentioned, but
I'm a fan.
I use both. We're bumping out. You'll come back. You're not mad at me,
I'm always mad at you, but I'll come.
Secretary Daley. You might be too. Governor Sununu.
I just think you're crazy. I don't get angry.
You
I just
do.
think you're nuts.
Crazy. It's good for TV though.
Coming up, tennis legend Stan Smith is on set with us. That is next. And right now, as we head to break, take a look at the markets right now. Dow futures have been up as much as 150 points when the show started. We're now down 186. So we're losing some ground as the morning progresses. S&P looking to open lower by 31 points. NASDAQ to be down 147. Much more of this morning's action straight ahead. Squawk Box will be right back.
Apply.
Little wood rackets. Our next guest is a legend in the sport and has insights into managing business and relationships both on and off the court. Joining us now, tennis legend who I remember well. Melissa has no idea.
I thought he was a shoe.
So yeah, he thought he was a shoe. Stan Smith, former world #1 and a member and former president of the International Tennis Hall of Fame, co-authored a new book, Winning Trust: How to Create Moments That Matter, based on decades of experience running his business. Stan Smith events. You've been in a great spot for years. I've seen you down there at Hilton Head.
Yeah, Sea Pines Resort is one of the great spots on the East Coast.
It is. And you were, I mean, people that think they're avid tennis fans, they probably have heard of you, but they probably didn't see you play.
No, you'd have to be probably 55 or 60 really to have seen me
Almost
play
a boomer.
in the 70s and 80s, and so it's
What an elegant game that you had. It wasn't as much of a power game.
Well, it was.
It was,
some
but
players
different.
had big serves, but it was more finesse, and people played a little bit like Roger Federer. You had slices and drop shots and top spin. I mean, you had a little more variety, I think, than
Wooden
today.
rackets and the small heads.
They really look small when you look at them now compared to these rackets.
What did you learn in your long career? And did the things you learned from competing in the sport translate into being successful business?
Well, you know, you have to put in the hard work. I mean, that's always the case. You have some talent, but you have to put in some hard work, and then you have to realize that it's not just a lonely game. And you know, tennis is mano a mano, but you have a team, and you know, when the players win, they always talk about their team. And so I learned, even in my era, it wasn't as big a team as there are now, that it's teamwork and there's relationships that are involved, and so it's important. And I was one of the founders of the ATP, so we.
Who's getting sued now?
It's getting sued.
By its biggest name, let's say.
Well, yeah.
Greatest player of all time.
And it's very odd. Well, you could call him the GOAT. You know, you got Nadal and Federer in that conversation.
Yeah, but
as
he's still
Federer.
playing. He's going to win another major, probably. Still a Grand Slam.
He could. Yeah, he could. He
Grand
definitely
Slam
could.
event, because if you say you won a Grand Slam, it means something
I know, it's
entirely
right,
different.
it's all four.
So I didn't realize what the suit was about. So yesterday we had Ahmad in here. Yeah, and what they're complaining about. It's a grind. It really is a grind. You're playing tennis, but is it a grind or?
Well, you know, I was
The
a founder. I was one of the founders of the ATP 50 years ago, 73, and it was always about schedule. It was about prize money, about the you know, how you wanted to distribute the prize money, top players versus the rank and file, and it seems like the same thing in a way. You know, players want to have a 9-month schedule, but the top players end up being a little hypocritical because they'll go 3 months of playing special events and exhibitions, and they'll keep playing. So that's one of the issues that comes out. But it's you know, they're always looking for better conditions for the players. It's so much better now than it was, and the ATP has done a fantastic job in in providing for the players and trying to keep it a semblance of order. You know, there's the 4 Grand Slams and the 9 Masters series, and so trying to get the public to understand, you know, the whole schedule of the events. And so there's certainly things that can be done better, and I hate to see the dirty laundry out there for the public, seeing, you know, the player issues that really could be resolved inside the ATP and the WTA. Now they're involved, and of course the ITF is involved, and they're trying to monitor with anti-doping and anti-corruption things as well. So there's been a lot of organization to help the game, and it's in a better place.
Oh, I remember the PGA had some similar complaints about, you know, you had the top 50 and then you got the other 350, and it's tough. Is it the same with tennis?
It's the same thing. You got the ticket sellers, or you have the top 10 or top 20. Then you got the rank and file that you want to support. The distribution of the prize money in the tournament should, you know, how much you go to the winner versus the first round losers, and so it's very similar issues that we had when we started the ATP. It's amazing.
What else? So we touched on the book, but what can you summarize it in you know?
Yes, the book really is accumulation of what we've done over the last 30 years of providing corporations, helping them provide events for their partners or their clients, and they want to develop a stronger relationship, which will accelerate the trust that they will have with those people, where they can do business together and hopefully you know, have more faith in what, you know, each other's thinking.
I said that I thought he was a shoe.
Right, she thought someone was bringing in the Stan Smith shoe.
I was very excited. I love sneakers. No, in all seriousness, you wrote a book, Sam Smith, I'm not just a shoe.
Yeah.
And that's
some people think I'm a shoe.
Some people think I'm a shoe. And that's what some people do think, because of the resurgence of the Stan Smith sneaker. The resurgence in general of sneakers in even corporate wear.
I know.
People wear sneakers with their suits to work, etc. 1 million pairs have been sold as of last year.
100 million.
100 million, sorry, 100 million.
Yeah.
1 million since last year.
What kind of arrangement do you have with Adidas?
Well, you know, it's been a
shoe.
great relationship with them over the years. It's such a great brand, and it back in '73 when I signed that agreement, I was so proud to be part of that brand, and I still am. It's fantastic, and so we've seen retro things. The Samba now is a very popular one, and then the Superstar. Then my shoe has been, you know, gone through cycles, and so it's fun to see people wearing shoes, like you say, tennis shoes, and we're going to a formal event tonight, and I'll probably wear my shoes.
Your Stan Smiths.
Yeah, yeah.
Who did you like best as a person and as a competitor? We think of the big. There's probably 10 guys I'd like you to.
Yeah, there's about 6 guys in my kind of top 6, and that includes Sampras,
Yeah.
Laver,
Yeah.
and Borg, and the 3 guys that are most recent. And those are fantastic ambassadors to the game. They've all really represented the game well, and so it's been a real. It's a wonderful game. It's so international.
Best announcer? You like McEnroe?
McEnroe's doing a great job.
He did.
And Jim Curry does a great job.
Brad Gilbert, he'd yell at me if I didn't.
Yeah, Brad's doing a good
you know,
job.
BG?
And Chrissy and Martina,
Yeah.
they've all translated into letting the fans understand what the players are thinking about as they're playing, and that's the key for those color commentators.
Yep. Whenever Wimbledon's close, or any of the big Grand Slams, and even some of the Indian Wells or Cincinnati.
Yeah, Indian Wells, the Cincinnati tournament is one of the big 9 tournaments after the 4.
Right, tournament.
So it's getting a renovation, and they almost lost it, but now it's going to be there, and it's a great event.
It's good to be able to talk about it and not do something. I just said that about basketball. Did you hear that? Yeah, can't do that. Or my wife, I think, won 60 straight sets. I think, but I did beat her a couple. But she played in high school. I beat her at a set though. I did twice.
You did. Playing fair?
No, yes, it was fair. Yes, it was.
You didn't make any bad calls?
No, it wasn't like I got to play doubles rolls.
Is there any trash talking?
She does do that.
She does that?
Yes.
Oh, not you.
No. I don't. I'm not in a position
You're not good
to
enough.
trash talk.
Stay married.
I'm not. But it was great having you on.
Thank you.
And you're legendary. And
nice to be
I'm one of the people that did watch you.
You're not just a shoe.
You're not just a shoe. Shoe betcha. Thank you.
Well, appreciate it. Thank you.
It is 7:04 on the East Coast. You're watching Squawk Box on CNBC. I'm Melissa Lee alongside Joe Kernan. Becky and Andrew are off today. Futures right now taking a breather after the big rally that we saw across the board. More than 1% across the board yesterday. We're looking at a lower open here. S&P looking to be down by 26. NASDAQ looking to be lower by 124. The biggest S&P laggards this morning, let's take a look at the charts here. Microchip topping the board there, down 7% pre-market. Analog, Apollo, GE Vernova, among the others. Let's look at the biggest laggards on the NASDAQ this morning. Microchip there, crossing the board there. PDD, Analog, and Palo Alto. Treasury yields holding pretty firm, the 10-year at 4.21%. And overseas, let's take a look at the European markets, which of course have been outperforming U.S. markets. A little bit of a breather there as well. Germany is down by 1.4% at this hour. Gold pulling back from record highs, but the precious metal, of course, has been strong year to date, up 40% over the past year. Gold COMEX, $3,000 an ounce. Joe.
It's the Federal Reserve holding interest rates steady, but noting that uncertainty around the economy has increased. Steve Leisman joins us now with more. Hey, Steve.
Good morning, Joe. Yeah, markets like what they heard yesterday from the Fed, but the question is whether the Fed should have been saying something the market wanted to hear. The Fed raised its inflation forecast for the year, partially or largely because of tariffs, but at the same time, the Fed's sticking to its forecast for 2 rate cuts, and Fed Chair Jay Powell suggested the tariff impact on inflation could be, wait for it, transitory.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored.
But what if the tariff impact will only be transitory if the Fed makes it that way with its forward guidance and its policy actions? Here's what former Fed Governor Kevin Warsh said in the Wall Street Journal about that in January. Quote, "It is the Fed's duty, designated by Congress, to ensure that changes in relative prices don't become embedded in the economy. The Fed's job is to stop second-order effects of price changes." Meanwhile, Barclays weighing in and warning, quote, "Powell's transitory rhetoric and dismissal of inflation expectations risks the Fed may be caught flat-footed, as in the pandemic." Now, Powell suggested that
The Fed is already restrictive and can hold rates where they are if inflation becomes a problem. Weaker growth can offset tariff inflation. Some administration policies could lean against the price increases from tariffs, and Powell dismissed the rise in inflation expectations, even though they have been pretty sharp. The Fed could be right. Tariffs could pass through the economy without having a broader impact, but it could also be that a dovish approach makes that less likely to happen. Guys, it was a bit like the chair said, you know, I'm going to watch this movie rather than be a director of it. We're going to talk about all this and more when we're joined by Chicago Fed President Austin Goolsbee. That's tomorrow morning for an exclusive conversation right here on Squawk Box. Joe?
Okay, Steve, that's good to hear. So the president will be on, when is that? Tomorrow, did you say?
8:30 tomorrow, yeah.
8:30 tomorrow. He demands. Does he demand you to call him that, or is that just me? I think he said Mr. President to you.
No, only you, Joe. You have to, yeah, only I call him Austin, I call him.
I used to call him Austin. Now it's a Mr. President.
But now,
fine.
Now he's a president. But you know, Joe, there's others like, not only Kevin, but I think Roger was sort of in that same camp of maybe transitory isn't the best word to use right now.
It was the worst word. I cringed, Steve. I mean, I was surprised that he dared to
we
use
can't
that
ban
word.
that word. No,
What happened
I
last
disagree.
time you used that word?
I think it will be. Look, if it describes what we're talking about, we can never say mission accomplished again either, because of that banner. I mean, you can't ban things just because they.
We're not saying ban. It's just.
I think that's
the
what we're
last time we had an inflation shock, it lasted longer than transitory,
you want to say it in a
and you want to use
way.
that again.
That won't help
temporary.
It won't
short-lived.
The point is that the Fed is not a passive player in this. If you look what the Bank of Canada said, they said we are not going to tolerate inflation, which really helps the process of not letting inflation become embedded. I think Kevin Warsh's idea is really interesting. The Fed has a role or is a director of this movie, not watching it.
Steve, thank you. Steve Leisman.
He was on just transitory. It's not like you're here for a good time, so I can't use that.
I am transitory.
Yeah. You're transitory.
I could be even more transitory than transitory.
Okay.
If I pick up.
Threatening me.
Coming up, NVIDIA making several announcements this week with CEO Jensen Huang giving a keynote speech at an AI developer conference. We'll talk about what the news means for investors and the future of AI next and later. More on the Fed's policy meeting with former Cleveland Fed President Loretta Mester. Stay tuned. You're watching Squawk Box, and this is CNBC.
Insurance.
Check out shares of NVIDIA this morning. The AI chip maker made multiple announcements on new products yesterday, as well as partnerships at the annual GTC conference. Here's CEO Jensen Huang on Squawk on the Street.
We're building AI infrastructure for the world, and it is very clear now that we're about $150 billion of AI infrastructure into a journey of trillions of dollars of infrastructure. And so we've got a lot of AI to build.
Joining us now, Sarah Kuntz, the Clio Capital Managing Director. Sarah, great to have you with us.
Yeah, thank you.
I mean, according to what Jensen Huang talks about, and according to the CapEx spending plans of all the hyperscalers, the AI story does seem to be intact, and yet there's a disconnect because you have that set of data points, and then you have what investors believe. And investors don't seem to believe that that AI spend will keep up. How do you sort of, where are we? Where's your view? Who's the right side?
I think it's hard for NVIDIA because they're not sort of trying to stay ahead of a competitor that's kind of neck and neck. They're trying to stay ahead of their own massive success over the last few years. And it is a lot harder to beat yourself than it is to beat somebody else who's releasing quarterly numbers that aren't as good as yours. And so I think that some of it is sort of the sort of tyranny of high expectations that's hitting NVIDIA, where a lot of the analysts thought that it would go up and to the right forever at that exact same velocity, and that's just not how it works. And so is NVIDIA still the leader in what they do? Absolutely. Is there anybody who's like a really close second right now? No. Are even the big, the Metas of the world who do make and design some of their own chips now still ordering from NVIDIA in huge quantities? Yes. Is that going to stop? No. Did DeepSeek hurt it? Not really. So there's nothing wrong here. It's just that we're used to a story of everything being perfect, and now it looks a little bit more normal.
Why do you think investors are so hard-pressed to believe the notion that DeepSeek is not hurting NVIDIA, will not hurt NVIDIA, and the fact that more inferencing compute power is needed, the better for the likes of NVIDIA?
I don't really know. DeepSeek is fascinating because it was sort of the most successful PSYOP we've seen in a while. It's a good program, and there are other good similar programs coming out of China, and they will continue to. They'll come out of anywhere. We have smart engineers all over the world. But for some reason, that really hit NVIDIA hard because people don't understand that when something is cheaper and more plentiful, we tend to use more of it, which is funny because as Americans, we certainly know that to be true, right? Gas gets cheaper, people buy bigger cars that require more gas. And so we know that sort of in our day-to-day lives, but these analysts, I think, continue to miss that when it comes to NVIDIA, and they're just having a really hard time kind of keeping the faith.
Yeah, there's been a real sea change in terms of the confidence being felt by CEOs in the economy. In just the past month or so, Sarah, I mean, the soft economic data show that sort of turn in sentiment. Consumers feel that turn in sentiment as well. And I'm wondering how that translates into how CEOs are guiding their companies, in terms of the companies that you speak to, and how we should translate that to the AI story.
Yeah, so you have to keep in mind that the AI story is unlikely to be sort of ChatGPT subscriptions for consumers. The AI story is now when you log into any Google, any sort of Google-owned property, they have that little thing, or any Meta-owned thing. They have those little stars, and they say, hey, do you want to make it easier, faster, better? That's the AI story, right? And it's not necessarily that you as a consumer are going to have to decide discreetly to pay for AI. It's going to be baked into the services that you use all the time. And so I don't think that it's as exposed to consumer. I think that CEOs certainly in tech are not feeling that. We're still seeing the pre-orders for NVIDIA. We're still seeing that they want that data center space. We're still seeing a ton of demand from the big tech companies, and less of a focus on sort of how do we pass this cost on to the consumer directly, because if the consumer is posting more, using your product more, more enmeshed in what you're doing, that's going to accrue gains to you. And then obviously in enterprise, AI is something that probably will, replace a lot of jobs. We're already seeing that in places like auto, where You have robotic arms that can sort of put cars together, big pieces of cars, and that over time likely reduces, higher cost union labor. And so when you have those abilities, I think that you're less scared in the short term about spending some of that CapEx, because long term it probably means safer, more capital efficient workplaces.
Sarah, great to see you. Thank you.
Thank you.
Coming up, a pulse check on the housing sector and the impact of tariffs, the latest Fed rate decision, and more. That's next. So take a look, if you would, at the shares of Darden Restaurants, parent company of Olive Garden and Longhorn Steakhouse. Company reporting earnings of $2.80 a share, it's a penny better than estimates, but revenue coming in at $3.16 billion. That's below expectations. Same-store sales rose 0.7%, below estimates of 1.6. And for the full year, this is probably what's doing it. The company sees earnings coming in below street expectations. Could be one of the pops and drops on fast money this evening. How long's that been going?
We can do that at 8:20 when Guy Adami joins us on set.
Guy Adami is here. Oh my God, how did we finagle that? We'll be right back.
Time now for today's Aflac trivia question. Frank Shields, a former MIT professor, invented what man's grooming product in 1919? The answer when Squawk Box returns. Apply. And now the answer to today's Aflac trivia question. Frank Shields, a former MIT professor, invented what man's grooming product in 1919? The answer, Barbasol shaving cream.
You know this, Federal Reserve keeping rates unchanged and marking up, though, its forecast for inflation. Joining us now at the impact on housing. Lead analyst at Housing Wire, Logan Mohtashami. Logan, there's headwinds and tailwinds. I guess I would think there's some think there's tailwinds. I don't understand why sentiment is going down. I mean, it's possible building material prices go up, but aren't mortgage rates responding to the 10-year dropping in yield?
Oddly enough, the 10-year yield dropping, mortgage rates falling, purchase application data for most of the year is positive year over year. Now, we're working from extreme low levels, but any uncertainty in the economy and economic growth slowing down is actually beneficial for housing as the 10-year yield falls. So when we think about tariffs and lumber, that's more of the new home sales sector. But for the existing home sales market, which clearly the White House, Treasury Secretary Bassett and Bill Pulte want to see grow, bond yields going down, just needing the mortgage rates to 6%. You can grow sales. I think the White House would be very happy with that this year.
Is there a construction labor shortage, and what does that do? Is that got anything to do with closing the border or immigration or any of these macro themes?
You know, every year for decades, we have deportations, and if mortgage rates go lower and new home sales start to grow, the builders somehow find a way to sell homes and build homes. So we've been hearing labor shortage concerns for almost 15 years now. But if mortgage rates go down, builder sentiment grows, new home sales grow, the builders find a way to build homes.
But it could be more expensive. Why did builder sentiment go down in the most recent report? What do you attribute that to? Just uncertainty from tariffs?
There's two things right now. Mortgage rates had risen up to over 7%. Over 7% doesn't work for the housing market. But then on top of that, the tariffs, the builders' profit margins are being somewhat stressed right now. Inventory is up for them. Inventory is up nationally. So it's not as easy for them to sell homes and make as much money as possible. So naturally, their sentiment has fallen down. But if rates fall down, like it has for the last few years, the builder sentiment tends to increase even with other headlines. So the cure for tariffs is lower mortgage rates, and this is why the White House wants the 10-year yield to go down.
You know, the flip side, though, or the reason why mortgage rates are going down is important too, Logan. And some might say that the 10-year yield is going down because there are concerns about growth in the United States. The Fed just raised its expectations for unemployment. We've seen in the soft data, University of Michigan, for instance, consumer sentiment is at lows. And so I'm wondering, you know, how do you sort of factor in weigh, okay, we got rates lower, but the consumer is feeling less confident about the security of their job and economic growth?
So during COVID, 25 million people were unemployed. It was a global pandemic. We had 5 million in forbearance. We had stimulus, but the 10-year yield collapsed and mortgage rates were at 3%. There's over 162 million people working because existing home sales are at the lowest levels ever when you adjust it to the workforce. It doesn't take much to move the needle from here. Very similar to the 1980s, early 80s, when, you know, affordability was worse. There was a recession early in the 1980s. Home sales were depressed. Mortgage rates fell down 2.5%. Sales started to pick up. So the housing market still revolves around the 10-year yield. We still have a lot of people employed because sales are so depressed. Mortgage rates going down for good or bad reasons will override any of the economy headlines just to get that bounce in sales, very similar to what we saw in the early 1980s.
So how would the Trump administration deregulate the housing industry? What are there permits is there red tape? What does that look like?
The red tape, of course, is one thing. Zoning is one thing. I believe Bill Pulte, the new head of the FHFA, might have some levers to pull, maybe to help GSE pricing. But again, you know, the federal level can only do so much. A lot of these zoning issues are state and local, so there's going to have to be a time where the state and federal level kind of work together with the private sector to get more housing going. But of course, opening federal land, if it's close enough to somewhere where people are living, there's some kind of infrastructure, that could be useful. That's something that's going out for the next few years. Supply is always the best way to defeat inflation.
So Logan, we gotta go. What's with the crazy portrait of Jack behind you? Did you? It's a painting, and is that from a specific? What movie is that? Is that Cuckoo's Nest or?
I think it's Cuckoo's Nest, but I mean I'm a Gen X, so I grew up with Jack. So
So
It's
I love
a fan
him.
favorite.
And he's now he's got a son who is an up and coming. I don't know if he's crazy. I like Jack, but he could throw a.
There's only one Jack.
There's only one Jack. There is those eyebrows. Goodfellas, 5 Easy Pieces. You ever see that?
And The Departed.
Departed with the
Yes.
coke on the. Oh, let's not go there. Logan, thank you.
Pleasure.
Where do you get something like that? Is that an actual original painting?
A friend of mine painted this.
You did, and you put it on your shot on Squawk Box. You had to know I was going to bring it up. Anyway,
It's 24/7.
Right. Last Detail. I've seen all of Jack's. He's the greatest. Thank you.
Pleasure.
Coming up, a look at this morning's biggest free market movers. Futures right now are pointing to a lower open, down 150 on the Dow. And later, inside President Trump's energy policy, Energy Secretary Chris Wright will be our special guest, 8:10 a.m. Eastern Time. Stay tuned. Squawk Box, be right back.
EU regulators taking steps to try to rein in Google and Apple, despite President Trump threatening tariffs on countries that hit U.S. companies with fines. The EU's executive body saying that Google's search and play products breached the bloc's tech competition law called the Digital Markets Act, or DMA. The company could face fines of up to 10% of global annual sales if it's found guilty of violating the DMA. In response, Google said the EU's actions threaten to hurt consumers and businesses. Separately, the European Commission ordering Apple to open up its ecosystem and help rivals connect with its iPhones and iPads. Apple could face an investigation and fines as well if it doesn't comply with the new order. In a statement, Apple said, today's decision wraps us in red tape, slowing down Apple's ability to innovate for users in Europe and forcing us to give away our new features for free to companies who don't have to play by the same rules.
Let's get to Dom Chu with a morning look at this morning's pre-market movers. Good morning to you, Dom.
Good morning, Melissa. So that mega cap technology news has the volatility picking up in the marketplace with the S&P closing higher, but now in the red so far this morning. So let's take a look at what's dragging the market. You can see the S&P futures took a pretty decent dive over the course of the last couple of hours or so, 60 plus points here from the kind of where we were just before the sell-off to where we are right about now. So keep an eye on those futures. They're lower across the board pretty much with technology. All of the Mag 7 names are falling. That index is down more than 14% so far this year. If you take a look at Tesla, Microsoft, Alphabet, Apple, Meta platforms, all off, swinging to losses now. Tesla down by about 1 3/4%, so keep an eye on that mega cap Mag 7 trade. Also, chip stocks, microchip technology tumbling after announcing a $1.35 billion convertible stock offering. That stock is leaving the S&P 500 lower in the extended trade. We're also seeing other chip names like Broadcom, Qualcomm, and Nvidia also lower in that pre-market trade as well. But there is one bright spot in the market so far today, and it's not where you might think. This is Five Below. Those shares are up about 10% right now. The discount retailer posted quarterly results that actually beat analyst expectations. They also issued strong current quarter revenue guidance. The company warned, though, that tariffs could hurt margins, but CEO Winnie Park did say she thinks there's opportunity to diversify where Five Below sources its products. So some of those effects of supply chains revamping is a positive sign for Five Below. Melissa, up 10%. I'll send things back over to you guys.
All right, Dom, thank you. Dom Chu.
All right, coming up, a closer look at yesterday's Fed meeting and what it means for markets and fixed income. As we head to break, check out the price of Bitcoin. Broke to 86,000 at one point. It's 85 and change. It's up from where it's been in the last week or so. Squawk Box coming right back.
Apply.
Fed keeping its forecast for 2 rate cuts this year, but saying uncertainty around the economic outlook has increased. Joining us now, Bill Egan, Chief Investment Officer of the Absolute, is it sponsored by the vodka? The Absolute Return, Absolute Return, I'm sorry.
Yeah.
Fixed Income Group.
That's where your mind's at.
That's where my mind is.
In the morning.
At JP Morgan Asset Management. You either, just from looking at your notes, you either think it's not going to happen or it's a mistake for 2 cuts.
Yeah, well, I think 8 Fed members told you yesterday that they just reduced their forecast to 0 to 1 cut at most. And so the details of yesterday's statement were a little more hawkish than I think the market interpreted. And I was kind of laughing at the reaction. And even today, sending 10-year Treasury yields lower, I think it's interesting. I mean, I was on here in December and the 10-year was around 410. I said I don't like it. Went to 480. Still didn't really like it because I still could get almost as much in cash as I could in 10s at that point. And today, you can get paid a lot more to own the short end of the yield curve than you can to reach out and extend out to 10 to 30 years. Why would I do it?
We've had cool inflation numbers, but you say we're in a secular period of inflation.
I think so. I mean, you have seen inflation come down, not anywhere close to the Fed's target, mind you, but it's come down, but now it's starting to move back up again, including the inputs to PCE, which are looking not so good going forward. It looks like they're going to keep moving up. Obviously, tariffs are not disinflationary or deflationary.
Are they inflationary?
To me, they are, because I'm seeing it directly.
Not transitory.
I hate that word.
I know. Everybody hates it. It's a okay.
I thought that word was extracted from
just because they screwed up. But okay, so is it something that tariffs cause permanently, or is it more just a temporary increase in the price of something?
I guess if they stay in place permanently, then you kind of have a permanent increase in inflation, right? I guess it depends on.
That'd be a one-time thing, though. Right?
Forever.
Yeah, fine. Fine, but inflation is the second derivative.
Right, so you get this big bump, and you're saying, but then it just stays there.
You go to Harvard.
Doesn't move up again. The bottom line is, a couple things going on here right now, right? People say, oh, the Fed's restrictive, this, that, and I just look at it and I'm like, well, if the Fed's restrictive, then why has the economy grown so well over the past couple of years? Why is inflation way above their target? Why is unemployment hanging at 4%? Jobless claims are in a great place. The labor force is getting thinner, if anything. Employment costs are moving up. Service costs are moving up. You've got gold, silver, copper, all at the highs, right? And those are all inputs into the manufacturing process. So I look at that and I don't feel so great. And I'm not trying to be a big bear here saying, oh my goodness, look out for the hyperinflation. No, that's not what I'm saying at all. All I'm saying is I think inflation is settling in at a level that's way, way above where the Fed's comfortable. And it's going to make it very difficult for them to make decisions around, oh, geez, we really need to ease rates here, even if the economy slows to some degree.
So if the president's already jawboning for lower rates, he's going to be disappointed.
I think so, if the Fed's to remain truly independent. I mean, but what's so restrictive about where rates are? I keep asking that question. And the other question I have is, why does the Fed still have close to a $7 trillion balance sheet, which is 3.5 times the size it was during the crisis of 08? The whole bond market's $50 trillion. Why do they feel the need to hold $7 trillion of it?
I mean, I guess, we live our life and we get over all these horrible things that are happening. But like someone said the other day, none of us are leaving this place. All right, so can we ever declare victory that the Fed orchestrated a soft landing and we put that behind us and now this is a new problem we have? Because if inflation is still where you say it is, it's still going to rear its head. Then they didn't do it. They left too much in the pipeline. They didn't fix it. And that would be premature to say that they did everything perfectly.
I think they need to adjust two things. I think number one, they need to adjust what they really feel the neutral rate is. Maybe we're at the neutral right now, right? Maybe we are. We don't know. I mean, everyone insists it's way lower because we got so used to this zero rate regime, which caused all the problems that we've dealt with, in part over the past few years, including the significant inflation we've seen.
So why isn't this a good thing with Doge and with tariffs coming in? Why isn't it good that the economy is so resilient?
Oh, don't get me wrong. I think what the administration doing longer term is going to be great. I think it's going to be very good for business. I think it'll be good for risk. But the things they're doing right now is there's going to be a lot of uncertainty in the short term because of all the things they're doing. Whether it's tariffs, whether it's deregulation, whether it's what we're doing with Ukraine, everything. I mean, first person through the glass door always gets bloody, right? And that's kind of what the Fed's doing.
Another good one. I got to write that one.
Yeah.
now too.
Very violent, but it's very illustrative. Like, it really conjures up an image. Where do you think the 10-year yield goes? We're at 4.199 now.
Yeah, I know. We're just barely above where it was when I was here in December.
And you said 5% then, right?
Yeah, well, no, I thought it, and it almost got there. It went to 480. But it's just been volatile for the past couple of years, right? It's been in this range between kind of the low fours and the high fours for a long time now. And I just think that's kind of where it's going to stay. Which is why, you know, I don't make coin flip bets in my fund, and betting on rates to go one direction or the other, to me, is kind of a coin flip, especially relative to cash, where you can make in 3-month T-bills, you can make.
But we stay in the range is important, because the idea that the 10-year yield would go below 4 would be really like underscoring the growth scare that we've been suffering.
100%. You're already building in several cuts, even the 2-year, which is below 4%, with Fed funds at 4 3/8 mid, right? So, you know, again, the market's already building in these cuts, even though 8 Fed members said yesterday they're expecting 0 to at most 1.
There needs to be an adjustment.
Yeah, so I just think you get in these ranges where people get all bullish, the 10-year goes to the lower end, then something comes out, they don't feel so good, and all of a sudden it goes back up to the higher end. So I'm not calling for 6% 10 years. I'm not dismissing it either. The biggest mistake people make in fixed income is they dismiss scenarios, right? As an absolute return manager, I can't dismiss any scenario. I got to make sure I can make money in rising rate environments, falling rate environments. It doesn't matter. But right now, I will tell you, you know, you're at the lower end of the range, and spreads among all forms of fixed income, whether it's corporate bonds, high yield, are near record tight levels. And the problem with that is when you have really tight risk premiums, everything acts like a treasury, right? Because there's no cushion anymore. So you're putting all your eggs in the rate basket, and that's not something I prefer to do.
So you got 20 billion, and what could I expect as a return? What do you shoot for?
Well, so it really depends on what type of volatility patterns we see going forward. I thrive on vol, right? Like, for instance, last week, a couple weeks ago.
Historically, what have you been able to deliver?
Well above the Barclays aggregate index. I think in the 17-year history of the fund, on average, each year we outperform it by, you know, between 1 and 1.5%, which is a lot in fixed income terms. And most importantly, in a year like 2022, when fixed income was down, your average fund was down 10 to 15%, we were actually up 0.5% that year. And last year we were up, you know, 5.4%, while the aggregate index was up just over 1.
Right.
So that's the difference between absolute return investing and relative return investing. A relative return manager in fixed income, where you're never supposed to lose money, right, Joe?
Right.
Could be down 10%. The index is down 11, and they're patting themselves on the back saying they did a good job for you. Meanwhile, you're like, wait a minute, that my dollar just turned into 90 cents.
And you, Jamie makes you go in the office, doesn't he?
Sure.
So you have a jacket with you.
It's
right there. But you took it off to come on the show.
You'd be more comfortable.
I am more comfortable. I'm saying, so you're playing along.
Yeah,
and I appreciate that.
Yeah.
Because he's not like just like screwing around, walking around without a jacket.
Yeah.
He's going to, you're going to work or else.
Yeah, no, I got to go give a presentation right after this.
I mean, if you don't show up on Saturday, don't even think about showing up on Sunday. That's Jamie's.
Hey, man, you know the mantra.
I know. All right, you're great. Thank you.
It's all good. Thanks, Joe.
Good
Thanks,
day,
Melissa.
guys.
Appreciate it.
Coming up, Robinhood adding March Madness to its platform. Now customers will be able to trade on sporting events like the NCAA tournament. That is next in Spot Plus Return.
Robinhood, getting into sports, the popular trading platform this week, added a prediction markets hub for just in time for March Madness. It's designed to give customers the ability to trade on the outcomes of events like basketball games.
Well, I think you've watched over the years, sports as a whole has just been growing in interest, just globally, but also here in the United States. And what we did see an increased cross-section of our clients interested in participating in and involved in sports. And when you have that intersection come together, we as Robinhood want to bring our capabilities, our app, our trading venues to where clients are going, and that's exactly what we're doing with these sports prediction market.
Did you not want to intro that soundbite?
Oh, you know, I hope our CNBC president Casey Sullivan was listening to that soundbite, because what he just said was the entire premise for the launch of the CNBC Sport.
By the way, you're Alex Sherman. I was supposed to intro you our sports event. I would have let you read the do your own soundbite, because I refuse to say take a listen.
Right.
I will not.
I will lower myself to say take a listen.
Just say listen or here it is.
You're right, that actually.
Because it's like Anchor 101.
Right, I should introduce myself now, right? I'm Alex Sherman.
You are Alex Sherman.
Sports
You're
reporter.
amazing and break all this stuff, and they're a huge addition.
And it's what he was saying there is that there's this cross-section between finance and sports now that has sort of percolated in all these different ways. Not only are the owners of so many of these sports teams finance people in their day jobs, but also from an investment standpoint, you're seeing so much crossover between interest in traditional financial products and sports betting. And what Robinhood has announced here, and in partnership with Kalshi, which is this predictions market, is not standard sports betting, but it's derivative of that. It's sort of a one-off, which is this idea of these prediction markets where there is a buyer and a seller. So it is a two-way trade. There's no house, there's no sports book. But it is a new way to bet on March Madness, which kicks off today. And so now you're betting on, you know, will Duke win this game, yes or no? And there are buyers and sellers, and there's a probability involved. And, you know, the trade goes up or down, and you can sell out before the game ends. And this is sort of the next iteration, I would say, of sports betting.
How did the odds are unbelievable, and the spreads that they get are unbelievable. They're down to I lost the game by a half point again last night after I won three-way parlay. I would have won. There already must be some of this already in the way that they come up with the odds.
Well, what's interesting is, so they don't need to, Robinhood does not need to come up with the odds, because the market comes up with the odds in this. But
the market comes up with the odds
right. Well, how do they do that?
Do it too.
Correct. And so I'm sure they use data from traditional sports books in order to come up with that. Absolutely, as well as everything else in the world. But what's interesting to me is that sports betting is only legal in certain states, but this is a CFTC regulated product, which means it's a federal, national product. So this is legal everywhere on Robinhood. So that is an interesting wrinkle here, where if you do live in a state where you haven't been able to bet legally online, you can now go to Robinhood or a predictions market and kind of get in on the action in this new way. Again, it's not quite the same thing as sports betting, but it's close.
The volatility seems like it would be greater if you're betting this way, because there's a market that is moving constantly.
Absolutely, right. And so it's constantly moving through the game.
Right.
And so you've seen, there is a little bit of volatility in traditional sports betting too, where the line is moving back and forth. But to your point, perhaps not as great. Look, there was a lot of success, I think, in the presidential election for what predictions markets could be. I spoke with, you just heard, J.B. McKenzie, the Robinhood executive, and he said, we're even starting to think about predictions markets for things like interest rates or the jobs report.
I mean, that's what Kalshi does, right? They do the odds of the Fed cutting rates.
Exactly.
The odds of,
and even this product was done in partnership with Kalshi.
Right.
So, you know, the idea of sort of like, look, you're already here. You're already making trades. This is just a new way to either hedge your investment or an interesting way to invest.
What about, you got some exclusive reporting on what NBA inside stuff?
Yeah, so fans of the NBA on NBC in the 1990s probably remember the old show NBA Inside Stuff with Ahmad Rashad and originally Willow Bay. And what we've learned is that the NBA has filed for the trademark to get for the name NBA Inside Stuff, potentially to lead up to a reboot of the show. NBC is considering bringing back a refreshed version of NBA Inside Stuff because they're getting NBA games again starting next season. I've reported in the past they're in talks with John Tesh to bring back the Round Ball Rock song. Still. These are long negotiations. But the whole idea here, I guess, is to kind of lean into the nostalgia of the NBA on NBC and tap into that audience that watched these games either as a kid or as an adult, in the 1990s and very early 2000s before NBC lost the NBA rights in 2002, and now they're coming back next season.
Right. Alex, thank you. Thank you. And I promise you, next time I'll discuss it with the powers that be.
You'll let me toss to the
Toss it to you. Alex is great.
You will introduce him
and I'll
properly,
introduce you properly.
as you deserve.
But then you can do, I think it's better for you to do somebody.
It'll make my career.
And you know what what the soundbite's going to say. You can give it the attention that it deserves. For more on what Alex is talking about, head to cnbc.com/sport and listen to the CNBC Sport podcast.
Coming up, a rough couple of weeks for some of the large cap bank stocks, but they have bounced off recent lows. Next, how the Fed's rate path, the regulatory environment, and economic growth will impact the sector. Squawk Box is coming right back.
Apply.
Let's check out the banking sector right now. Joining us, Jason Goldberg, Barclays Senior Equity Analyst. Jason, great to have you with us. Where are we in the, like the broader markets, banks took a tumble because they had outperformed in the rally post-presidential election. They took it really hard when we sort of course adjusted here. So where are we right now in terms of valuations?
Yeah, no, valuations are 2 multiple points below historical averages. But when looking out, if you kind of
on a price to book,
on a price, price to earnings,
okay.
Price to book, you're about a half a point below where you've been historically.
Okay. So how do you see the environment? Has the environment changed from when banks had a huge run up and peaked during this most recent rally? Have the fundamentals changed?
Not really. If you think about the reasons for the run-up, it was really twofold. First, I think the market getting excited for a pro-growth agenda coming from the administration, and then secondly, less regulation, helping the overall industry. If you think where we stand today, I think most folks believe that will still come to fruition. Now, in the near term, there's some uncertainties. I think the market's trying to figure out whether it's taxes, immigration, tariffs, and the like. But I think there's an understanding of the next few months that will get sorted out, and that will bring corporates back to borrowing, investing, and lead to increase in M&A and IPO activity.
On the M&A activity, there was a belief that there would be an FTC that would allow more mergers, more deals to happen. Have you rethunk that part of the equation?
No, listen, we still think you'll see consolidation really across all industries. I think it's taking a bit longer to get certain people in places to allow that to happen. And I think corporates are a little bit sidelined at the moment because they want to know what ultimately the outcome from some of these tariff and immigration policies. But once that's figured out, we do think you'll see kind of a re-acceleration of this M&A process.
What's up with Bank of America? And I asked that because it was one of the first banks to move back to pre-election levels, and it seemed to be a laggard.
Yeah, it has. I think part of it was, there has been, filings that Berkshire Hathaway was reducing a fairly large stake. So that has weighed on the stock. And then secondly, I think just Bank of America, right? There's some questions and uncertainties that are impacting America at the moment. And they get impacted by that. But looking out, we do think they're well positioned to capitalize on growing net interest income, rising fee income, controlled expenses, and given where valuations are, next couple of weeks hard to predict. But over the course of the year, we do think those shares can outperform.
You've got an overweight though on all of your money center banks under your coverage. Which is your favorite?
Yeah, at the moment, I think we've kind of talked about Bank of America. Should do well. JP Morgan's kind of typically the best athlete in the bunch.
And your least favorite is none. That's
listen. Generally, we
should lean from overweight everything.
If you think about kind of the backdrop we talked about of an environment where loan growth could pick up, M&A and IPO activity could accelerate as the year goes on, an environment where we should see the group benefit from a reduction in regulation. The biggest banks really took it on the chin for the last 15 years, getting progressively more stringent, and now particularly with Mickey Bowman being named Fed Chair by supervision. A much more pragmatic approach to bank regulation, that group should benefit.
Okay. Jason, great to see you. Thank you. Jason Goldberg.
And it is now just after 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. Andrew and Becky are off. She's off again tomorrow.
I know. Because I'm here.
Woohoo! Among today's top, so I didn't know that. Sometimes.
Present for you.
It is. It's like early Christmas. Among today's top stories, we're watching shares of NVIDIA this morning after, nearly 2% pop. Because pops and drops. Don't fast month. Yesterday, that's what we saw. It's not anymore. It's at least 10 years old.
It's not longer.
CEO Jensen Huang telling the Financial Times that his company plans to spend several $100 billion to source U.S.-made chips over the next 4 years, including those from Taiwan Semi and Foxconn. Fascinating. It was a great interview yesterday. He's amazing. I was talking about I don't know how to judge if a CEO is really good or not. We talked about that off camera. Sometimes they got the wind behind them.
Right.
I don't think
the environment is good for them.
Right. I don't think that applies to Jensen. I don't think there'd be anything close to what NVIDIA is without him. AI startup CoreWeave, which is backed by NVIDIA, is planning its initial public offering at a price between $47 and $55 a share. That price range would raise about $2.5 billion in valuation for the whole company of about $35 billion. And the White House says that President Trump's going to sign an executive order today to close the Education Department. Formally closing the department would require, though, congressional approval.
Bank of England voting to keep rates on hold at 4.5%. That was as expected. We should note that ECB President Christine Lagarde also talked about the impact of uncertainty on the economic environment. We did see futures respond a little bit, perhaps, to those comments. We do see a lower open after yesterday's 1+% rally across the board on the S&P, the Nasdaq, as well as the Russell 2000. S&P looking to be down by 17 right now. Nasdaq looking to be down by 89 points. We were off the pre-market session lows. As for Treasuries, fairly stable with the 10-year at 4.20%, the 2-year at 3.94%. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
Hi, Melissa. Hi, Joe. So let's start things off with a look at shares of both Tesla and Carvana, moving in part given new analyst actions from the team over at Piper Sandler. Now, for Tesla, the stock remains an overweight rated one, but the target price gets cut to $450 from $500. They say they're not discouraged by the recent volatility in the shares, and they think the shares are cheap, but they're dropping the target price due to reflect lower price to earnings multiples. So Tesla shares off about 1.25% of the pre-market. Meanwhile, Carvana is getting raised to overweight from neutral, gets a new $225 target price. They're citing things like the ability to resume growth trends even if the used car market weakens, and more relative insulation to the tariff side of things. So Carvana shares up 2.5%. We're also keeping an eye on Micron Technology. The company is set to post its quarterly results after the closing bell. Shares are down around 0.25% in the pre-market trade. The chipmaker had issued some weaker guidance for this quarter despite posting an earnings beat in the previous period, which sent the stock plummeting back in December. But that stock is up now more than 20% this year and nearly 9% just this month alone. So investors will be watching Micron's results closely. Those shares relatively stable right now. And we'll end with some news out this morning. If you take a look at Beacon Roofing and QXO Inc., they're both up right now. QXO will acquire Beacon Roofing Supply for about $7.7 billion, ending the months-long takeover battle. Beacon is a leading distributor of roofing, waterproofing, and exterior products. QXO CEO Brad Jacobs said the deal is a key milestone in the company's plan to be a leader in the building products distribution business. So that is a big deal coming up here. Now, for more on that, the CEO will join us on Squawk on the Street at 9:45 a.m. this morning. Must-watch interview there on the future of this particular deal. I'll send things, Joe, back over to you guys.
Great. Thank you, Dom. Up next, President Trump meeting with top oil CEOs as he plans to boost U.S. energy production. Energy Secretary Chris Wright's going to join us after the break to talk about that. Later, former Cleveland Fed President Loretta Mester reacts to the central bank's rate course. Spark Fox coming right back.
Mindset.com.
President Trump met with top U.S. Oil executives, including the CEOs of ExxonMobil, Chevron, ConocoPhillips, Phillips 66, and Marathon Petroleum to discuss the administration's plans to boost domestic energy production. Joining us now with the details, Energy Secretary Chris Wright. Mr. Secretary, it is good to see you. You know, around here we don't like burying the lead. That's reporter talk. So we did it right at the top. Because they have not been to do they know how to get to the White House? Any of those oil executives? How long has it been since they were at the White House? Not in the last 4 years.
Exactly. In fact, there were a few newer CEOs that had never been to the White House before. There were several that had been there before, but years ago. So yeah, that was the first message. You know, they're no longer the scarlet letter on their foreheads now for producing over 80% of American energy. And the cost of that is just massively impactful on people's lives. So to pretend they're not important or we should somehow deny they exist, just one of the many absurdities of the last administration and why President Trump was elected to bring some common sense back.
There's a lot of different, depending on where you stand on the issues, Mr. Secretary. It's under the Biden administration, we got back to all-time highs in barrels per day. Did we not? But then on the other side, you hear critics say that the counterfactual would even be more if we didn't have, I don't know, ANWR or not being allowed to open up some offshore leases, et cetera. What can you say about that? Was it full bore for the oil company? Were they able to do maximum production under the constraints of the Biden administration, or can they even do more?
Oh, definitely can do more. And you're right, it was record high productions of both oil and natural gas. But the counterfactual is, of course, it would have been higher. No federal lease sales for the first couple of years of the Biden administration, slow rolling permits, not allowing pipelines or gathering lines to be built. That just means this stuff isn't developed. Didn't mean people didn't drill for oil and gas. But one of the points I made in my testimony to Congress a year ago was if you put barriers and at the margin you reduce the production of oil and gas, even when it's at a high level, if you reduce it by only a little bit and you do nothing to change demand, you're just guaranteed to get higher prices. And that we saw 4 years of that. Higher oil, higher natural gas prices than we should have had. Not high, but higher than we should have had.
Do you think that what was the impetus for that LNG? It seemed like a bone to the green lobby, I don't know, no new facilities, or has that been reversed? And can you talk about I mean, LNG is one of our greatest strengths in the United States for exports and for our own domestic energy use and everything else.
Oh, spot on, Joe. Look, it is the fastest growing export of the United States and our second largest export. Only oil and oil products do we export larger in dollar volume than liquefied natural gas. It's the fastest growing energy source on the planet over the last 15 years, and we're by far the biggest producer. So this is just a win all the way around. Yeah, now what the Biden administration did here is just actually crazy. They did a study, because they were, remember, all of government about climate change. They did a study to see what would be the impact of growing LNG exports on climate. Not on people or humans or allies, but on climate change. And the result was the more LNG you exported, the lower greenhouse gas emissions went. They should have done cartwheels and doubled down. Instead, they buried that study. It didn't acknowledge its existence. 4 months later, announced a pause to investigate the climate and price impacts of natural gas, and then did a new study that was more fiction than fact, and then released that, weeks after they left the door and said, oh, geez, the data shows it might be negative for Americans and for the climate. Just undermining government, undermining trust in science and facts and data. But we've reversed those days. On day one, we got rid of the LNG export ban. Permit ban, and I've already signed 5 actions in less than 100 days to get more of these terminals permitted, under construction, more American jobs, more American energy, and greater security for our allies around the world.
So Secretary Wright, getting back to the meeting with Mike Wirth, the CEO of Chevron, Is the administration closer to extending that license? And what is the thinking behind it? I mean, what is the most compelling reason to do so? Is it because you want to box China out? Because if Chevron pulls out, China will step in?
Look, the president's broader agenda for sure is to grow American prosperity at home and influence and power abroad. And energy is just a fantastic tool to do that. So the vast majority of the dialogue that we had in that room was about how can we unleash American energy? How can we make it easier for people that want to invest and have specific projects to go ahead and develop them? So look, I won't go into any details there on some dialogues that are ongoing. But one of the things that was dialogued, the Biden administration did over 60 specific actions reducing development in Alaska. Not just for oil and gas, but for mining or minerals or any economic activity for that state, far more sanctioned and restricted than Iran or Venezuela. You know, then when oil prices went up, they asked Iran and Venezuela for more oil, drained our strategic petroleum reserve, and didn't remove a single sanction on Alaska or the rest of the western United States.
Well, I'm
so
curious,
again,
Secretary, right?
the main point was, go ahead.
Sure, but in terms of unleashing or lifting sort of the bureaucracy on drilling in new sites, I understand for other things other than oil. But with oil at 66, it's a very different equation here. Oil companies, I would imagine, this is what Mr. Worth told you also, they don't want to drill more. They want to be disciplined about their capacity.
Yeah, all prices of oil and natural gas and all commodities, they're dictated by supply and demand. You know, nobody decides the price of oil, it's just supply and demand. But I think we've seen a market discounting the fact that clearly it's going to be easier to produce oil and gas in the United States. The restrictions and impediments we had in the last 4 years, they're gone. And so the market is discounting, yes, more supply is going to come, and that's pushed down prices of oil, gasoline, home heating fuels, everything across the board. That's a win to the American people. It'll remain a win for the companies as well, as if their costs are lower and their risks are lower, their break-even cost above which they're profitable, that's going to move down too. In fact, it's already moved down.
Well, Secretary, do climate change advocates have reason to be worried? I've even seen some Republicans talk about a carbon tax. I think they're talking about a carbon dioxide tax. But if you say carbon dioxide, carbon sounds black and sooty and horrible, whereas carbon dioxide is this liquid, colorless gas. So they always say carbon, but carbon taxes, carbon sequestration, the IRA had giveaways to the green lobby that would blow your mind. Are those all going to be reversed or somehow frozen? Or I mean, how do you view the whole subject? Are you going to get to net zero by 2050, Mr. Secretary?
Absolutely not. No country on earth will get to net zero on 2050, but the urgent efforts trying to do it have just driven up energy prices, move industries out. Look at what Germany's done. This is an industrial powerhouse. Most of their manufacturing industry has left the country. They've tripled their electricity prices, and they went from 80% of their energy from hydrocarbons to 74%. That took them over $500 billion, people impoverishment, industry exporting, they got down to 74%. Net zero by 2050, of course, is just nonsense. It's an activist thing, and it's a top-down big government justification to do mostly anti-human things. But what I will say to maybe not to the climate activists, but to the thoughtful people about climate change, we will follow the math and the science and be honest about the trade-offs here. Everything in life has trade-offs. If you can reduce greenhouse gas emissions without raising prices or reducing human freedom, that's a big win. And that's what the rise of U.S. shale gas has done by growing LNG export. We share that economic and reduced greenhouse gas benefit with the world. But we're going to treat things like they're real serious topics and not a quasi-cult religion where we'll justify anything in the name of climate change, even when it's a reversing of benefits from climate change, as the Biden administration did with the LNG pause. Return of common sense, I should say.
I was going to ask about the SPR. What's a good price for you? Where would you say I would buy with both hands? What price? 50?
Oh, I never comment on oil prices because you just don't know where they're going to go, what they're going to happen.
You got to refill it. That was no crisis. That was no crisis. That was a crisis of a midterm coming or something. That was the crisis, and oil prices were too high.
Absolutely, 100%. And yes, we have stated right up front, we will refill the Strategic Petroleum Reserve. You've got to get budget approval to do that, but 100% that's going to happen. Unfortunately, you can refill it a lot slower than you can drain it. But we've got to get going on that, and we will be going on that very soon. But yeah, it'll take years, but the Strategic Petroleum Reserve will be returned to its original use.
Very good. Secretary Wright, thanks for being on this morning. Appreciate it.
Thanks, Jill.
Up next, after liking what the Fed had to say yesterday, futures this morning implying a lower open. Fast Money's Guy Adami will join us next with some stock ideas. And check out shares of Darden Restaurants after reporting results. The parent company of Olive Garden and Longhorn Steakhouse reporting earnings of $2.80 a share. That's penny better than estimates, but revenue coming in at 3.16, below expectations. Squawk Box will be right back.
Terms and restrictions apply.
Check on futures here. We are looking at a lower open after yesterday's 1+% rally across the board on the major averages. S&P looking to be down by 23 points. NASDAQ looking to be lower by 104. The markets yesterday really taking to heart what Fed Chair Powell had to say in terms of the reassurances that economic growth was solid, etc. Joining us now, Fast Money Trader.
Come on,
Guy Adami,
clap
clap
him
you
in.
in.
Clap him in.
Clap you in.
Can I say a few things before we start? You know, Joe, I get to see Melissa every single day.
You do. I know.
But I haven't seen you in real life in quite some time. Is it possible
You've gotten better looking over these years? Because as I sit
you
here,
haven't seen me?
As I sit here across from you, it's just
amazing.
remarkable.
Really?
No, I mean that sincerely.
You're learning. Grasso,
And I am.
Grasso tell you how to
and
do
I'm
that?
so I am so excited to be here.
Now the viewers will not believe anything else
No,
you have
that
to say.
is all factually true.
Exactly. Thank you, Guy.
Good to
and
be
welcome.
here. No,
And
thank
welcome. Grasso was unavailable.
Mm-hmm.
That's not true. We wanted you to come.
Yeah,
I know
of
you
course.
didn't. No, Joe did not want to be here, but Melissa did. So
I
it's like a
always
little,
love all my
it's a little
traders.
fast money tag team.
Let's
Yes,
do it.
exactly.
Let's
Let's do
give
it.
us a
Are
lot,
you
a
surprised
lot
that
of
we're
pops and
reversing?
drops.
You know, Joe, you've seen this. I know, Mel. Typically, the day of the Fed, you get a move, and then the second day seems to be the counter move. So what I'm seeing today sort of is historically what I've seen over the last couple of years. So I'm not surprised. And if you listen to what he said yesterday, you know, this was 11 months ago, almost to the day, that Jerome Powell said in response to some question, I see neither the stag nor the inflation, which sounded clever and funny, and maybe it was. But yesterday, actually, Joe, if you saw, and I know you did, he actually lowered growth expectations, was sort of pessimistic on the job market, and raised inflation expectations. So incumbent or sort of embedded in that is factually stagflation. Now we can argue whether or not the employment picture is still robust enough where it's not, but clearly there's some a bit of about face
And
there.
then the market went up 300 points.
On the back of what I think was the tapering the QTs, go from
Really?
25 billion to 5. Listen, not that I know anything, but that to me, I think it was expected, but I think the market viewed that as the next step to possibly QE. So that's my sense on the whole thing.
It seems to me that it would never be, remember airplane? It's never
Yeah,
a good
sure.
day. Never a good day to stop sniffing glue. It's never a good day to try and put tariffs on, maybe even reciprocal. Some people, you can get even some people on the left to acknowledge maybe some reciprocal tariffs make some sense. Never a good time for that. Never a good time to do Doge or to, it's always going to be near-term pain. But the economy is about as good as it could be in the markets after 20% gains 2 straight years. Don't you think, and with 37 trillion in debt, don't you think now might be the time to be doing these
No, I
things?
agree with that. But is the economy as strong as people seem to
Is
think
it?
it is?
That's
I'm
why
not
you're
sure.
here.
I mean, you're talking about maybe 45% of people live paycheck to paycheck. I think it's 30% of households. I mean, that's not a robust
And
economy.
it's not
today.
new, but it's not
No,
new.
it's not new. But let's not pretend that it's as
We
great
just
as it is.
had the
18
JP Morgan guy, and did he say the economy's still great? He's worried about, yeah?
You know, look, $18 trillion of household debt. I mean, 23% the average rate on a credit card, $1.2 trillion in credit card debt. I mean, yeah, people have jobs, but I think they're fighting inflation with credit. I don't think that's a robust economy.
So if the economy's weak and needs cuts and can't get cuts because inflation
That's a problem.
factors are still in, so you're stagging inflation.
No, I'm not stagging anything. I'm hanging out with you and Melissa.
Stagging
We're having
inflation.
a conversation here in the
You
morning.
think that word will come back, like transitory is back? You think stagflation is going to be back?
Maybe we can make that great again, Joe.
Don't you think it will?
After 40 years of what was really...
I'm not saying that it will happen, but it
The
will
bond
enter
market-
the conversation.
Right,
I
the
don't
bond
think
market
it's-
had a run. I don't think...
We gotta go.
Well,
We've got
never-
that out of the other
we'll
side.
never
Swap's
see
not
that
through.
again.
We gotta go.
I don't,
Be right back.
We only got 10 seconds before we get to initial jobless claims. Rick Santelli is standing by at the CME in Chicago. Rick, you got the numbers, please.
Yes, well, let's see. We're expecting claims. This is for the initial claims the week of March 15th, and continuing claims, of course, week in arrears, March 8th. 224,000 expected on initial, darn close, 223,000, which means it's up 2,000 from a very slightly revised 221,000. We continue to be so well behaved. We haven't been above 250,000 since the first week in October, of course, of last year. Continuing claims, nudging a bit closer to 1.9 million, but close to expectations, 1,892,000. Rearview mirror, we degraded last week a bit from 1,870,000 to 1,859,000. The key there is last time we had a reading at 1.9 million. Well, it was January, second week of January of this year. Now, if you go back to last time that happened, of course, you're all the way back to November of 2021. Philly Fed is out. I always like to pay attention to that. The business outlook expected to be a positive number, and it is. Comes in at 12.5. Last month was 18, to give you a sequential notion of how it's doing there. The last negative number was decent last year. The last month of 24 was minus 11. And finally, we're looking at current account balance. It was started in 1960. The current read is minus 303.9 billion. In the rearview mirror, minus 310.3 billion was the biggest current account deficit ever, going back to 1960. Pre-COVID, the biggest number we had was minus 218 billion, and that was in 2006. We see that interest rates have moved down since the Fed meeting. 394 right now in a 2-year. That makes it down, what, down 4 basis points? And keep in mind, these are the lowest intraday yields in a 2-year for exactly 1 week. 1 week ago, Thursday, March 13th. If you look at a 10-year, Joe, it's at 419. That's minus 5. These are the lowest intraday yields since a week ago, Tuesday, which would have put it at March 11th. Everybody debating why rates are down. I heard Guy Adami, one of my favorites, talk about balance sheet runoff being the spigot turned off a bit. Hey, anything's possible. We never get a memo on these things. My own notion is, let's see, less growth, less inflation, abilities to bring it back down to 2%. We have less pretty much of everything going on within the U.S. economy, and I think that is the main notion going on. So we want to watch how the yield curve moves to give us more hints. I think the real key here is to watch a 2-year and to see how close it stays to 4%. Back to you.
What else besides the 2-year would let us know the fate of the economy? Because we just had someone on talk about how great, how many indicators in the economy are still really positive. The J.P. Morgan guy who's in that business with fixed income, Rick.
Well, here's the issue I have, Joe. It's really hard to discern the organic side of the economy from the bought and paid for last administration overspending side of the economy. The latter, I think, is running out, and some of the policies of the current administration might try to even claw back some of the unspent money. But there is organic growth underneath there, and I always try to pay attention to the priming, okay? We primed the economy for years with over money. We bought a solid economy, okay? But some of that priming is going to have more of a lasting effect. My issue right now is the current administration, I heard a guest say this, what he's doing, what the Trump administration doing, I think long term is good. Okay, but in the short term, it's going to create conditions where voters wanted this, but they might not have the stomach for this in the time frame it takes to actually tackle some of these debt, deficit, and inflation problems. And therein lies the rub for investors.
All right, Rick, we're going to get your buddy to weigh in here. Steve Leisman joins us now with more. If we truly are stagflating at some point, that word's coming back, Steve, why would rates be falling if we're flating still?
Well, the market seems to be less worried about the inflation side of things. That could be Fed credibility here. You know, there's a debate about what Powell said yesterday, and was he too dovish? But he also emphasized the uncertainty. He also emphasized that the Fed is currently restrictive, and one of its potential responses to higher inflation would be keeping rates where they are. And the market could be concerned, or seems to be more concerned, I guess, about the potential weakness here. I will say that all over the globe, Joe, our tariff policy is echoing. It's echoing in the Bank of England statement, which mentioned our tariff policy. It's mentioning, maybe most importantly, in comments made by Christine Lagarde, who talked about, what did she use that term? Stagnation, I think, is what she talked about. She said it's possible that the tariff policies going on could cause the European economy to stagnate. So I think in that context, look, it's a tough question. It's a tough thing for the Fed here. To me, of course, the transitory thing is we're all talking about, but the most important thing I thought Powell said yesterday was, who's confident in their forecast? And the answer is nobody. So I think that might be a cautionary tale for investors out there, Joe, which is, don't be banking too much on any particular outcome. It could go either way. These tariffs could pass right through the economy and we'll be fine. Or there could be a pretty substantial impact on growth here. I think it's the growth thing the market is focused on, and perhaps add to that Fed credibility on inflation, and it's not worried about that side of the equation.
You get to talk to Steve very much?
Yeah, Steve was on our show last night. I love Steve. Tim Seymour is going to his shows a number of different times. He's a wonderful musician, and I think he is probably in the Hall of Fame of CNBC in terms of not only his tenure, but the acumen he brings to the network and to the audience. He's in the Pantheon. Hi, Steve.
I must be emeritus or something then.
Guy, how are you doing?
Yes, I'm well. Now, we had this conversation last night, and Steve pushed back correctly. You know, my concern, Steve, I think, the jobs picture, right? And it's been extraordinarily firm, robust, whatever word you want to use. But if that starts to deteriorate, and we've seen this before, you know, once that starts to move, it's sort of, you know, terminal velocity type of thing. And lower rates, I don't think, is sort of the salve for that. Is there a concern amongst the Fed that, you know, they might get the unemployment rate that they want, which is probably about 4.5%, but then it overshoots to the upside?
I think that's a fear here, and I think that, look, Guy, I've been trying to figure out if what Joe and Rick have been saying has been correct about the government being the substantial part of growth over the last 2 years. I will say that I have not made a conclusion yet, but I have learned over the course of time, Guy, just how much government is involved in hiring in ways that are difficult to count. Joe and I actually had a quick conversation where I said the government contribution to GDP is very small, and Joe correctly responded that, well, but it's in other places. Well, it is in other places. It's in lots of other places. You have these private contractors that are working on government contracts. You have money that goes to state and local governments that from the federal government that ends up being a part of their hiring. You have offices of the federal government all over the country. So, Joe, Joe and Guy, people are trying to figure out this impact of the decline in federal spending on employment, and it's very difficult to do. It's very difficult to game out. And plus, I think the Doge data is not exactly, what would you say, transparent, to be kind here. I am looking, guys, I've been adding up as we've been going along, continuing claims from DC, Virginia, and Maryland. They are 7,000 above, which is not that much, but it's a sign of things to come, perhaps, above where they were at the beginning of the year. They're also larger as a percent of all continuing claims that are out there, and this only likely reflects the private contractors. On the other side of this, you have a separate federal initial claims number, and that the continuing claims on that is up by about 600 on the prior week, March 1st. So, Guy, I think you're right that there should be some concern about employment here, but I also think, as I said in the 7 o'clock hour, the Fed should be taking a pretty firm stance on how it will treat any second-order effects on inflation that come through the tariff. Our colleague Megan Casella from Washington is reporting that White House official told her there will be tariffs on trillions of dollars worth of goods, which is interesting because I think our total imports, Guy, are $3 trillion.
Steve, is Rick still with us?
Yeah, I'm
Rick?
still with you. You
Rick,
know, here's what I want to ask. One question.
I want to ask you something. One of the things that make you most positive about what's going on is that the deregulation could shift some of what Steve was just talking about back to the private sector, and that's a much better place for the activity to be occurring. How long does it take for deregulation to show up in the private sector so that we don't have to worry about how less government slows the economy down?
Yeah, I mean, just look at permitting in California. There's your litmus test, in my opinion. And I think that it's even more than that. You know, when Steve was talking about Doji being transparent, my question is, and we hear this all the time now in the media, transparency. I think that what's going on has been unbelievably transparent. I would like somebody to give me a concrete example how you can cut the government in any more of a transparent way when Congress itself, and half the political party, the Democrats, do not want to trim what everybody understands is a hiring bonanza that occurred in the last year and a half of the Biden administration. How can we do it in a more transparent way? You can't get Congress to do it. The only thing Congress is good for is maybe voting a new holiday in the calendar every other year. Or debating, they can't even get daylight savings time right. And you want them to come up with a transparent way to cut government. It's never going to happen, Steve.
No, Rick.
You have to do it somehow, though. Give me a
You mean
suggestion. What could be
extrajudicially?
more transparent?
No.
Yeah.
Here's a couple of points I'd like to make. The first is that they keep putting up stuff on their website, and then reporters keep running it down, and it keeps not being accurate. So that's transparency number one. The other issue is that
Give me
when
one
they
example.
fire
Give me
people,
an example. Give me an example of
I
something
can go
that's
through.
inaccurate.
There were
one.
several contracts that were put up that they said they saved, they were expired. There was one contract they said was $8 billion. It ended up being $8 million. I'll send you the articles. There are a ton of articles,
Oh my
Rick.
God!
But
Isn't
that's not really the main.
so horrible? Come on, Steve. You think you could break some eggs without getting a couple of shells on the countertop? Give me a break.
I think you say. I don't know what the right response is to that, Joe. Rick, all I'm saying is that they said they did X. They ended up doing something considerably less than X, and it didn't check out what they said. But that's not the main thing. The main thing is we're trying to figure out what the firing is, Rick, okay? So they fire the probationary workers, a judge puts them back. They fire this person, a judge puts them back. So the issue of trying to figure out what the heck is going on, Rick, is very difficult.
We've got to leave the conversation there, guys. I'm sure we can go on forever.
I got this started. It's not fast money. I got this started. I'll tell you, Steve, in Rick's defense, I would say this. I've never seen so many people worried about the transparency of the process of trying to shrink the government while not even caring about looking into the transparency of the $37 trillion, the $2 trillion extra that we spend every year. So on the margin, you got a couple of things that didn't go right. What about this bloated behemoth that just never, ever has to mind its P's and Q's because it doesn't have any, it doesn't have to earn a profit. It just taxes people more when it overspends. What's wrong with looking closely at every single thing, Steve?
Absolutely nothing, Joe. However, what I think is wrong with
we called back
is reducing
one guy who
it
was
in
on
what appears to be
one guy shouldn't have been fired. We got to bring him back so we
let
don't
me
look
finish,
at the
Joe.
government.
Joe, let me finish. What I think is wrong is reducing it and cutting it in what appears to be an extrajudicial way. Congress has the power of the purse. Congress has the right to figure out what is spent.
Student loan
There's
forgiveness?
an impoundment law. You know what, Joe? That's the way the law is written. That's the Constitution of the United States.
How about student loan forgiveness?
When did we forget about that?
The Journal the other day said, don't repeat what went on for the last 4 years with overriding the Constitution and the judges.
So do it differently, but do it according to the Constitution.
Let's start now. Let's start now. And you didn't complain over the last 4 years. Not one bit.
What was it? What do you mean I didn't complain one bit? I complained about the Biden bill. I complained about plenty of things.
Student loan forgiveness, student loan forgiveness, all the things that went against the rule of law.
And they went to court.
Not enforcing border
and the court
policy.
said no, and they stopped it. They stopped it when the court said no.
No, he didn't. Not the student loans. They did. They kept doing it. Melissa's right. We got to go. But we got to do that fast money.
5 minutes ago. Up next.
It's a 3-hour show. It's a 3-hour Squawk Box.
Be right back.
one of them.
The Fed raised its inflation forecast for the year, but stuck to its forecast for 2 rate cuts. Joining us now, former Cleveland Fed President Loretta Mester. She's now professor of finance at the Penn Wharton School and a CNBC contributor. Loretta, great to see you.
Nice to see you too. Thanks.
Did you agree with the Fed's assessment that the base case should be that the impact of tariffs is transitory, that UMISH was an outlier?
I think that they should be taking the inflation expectations moves that we've seen in some of the measures a little more seriously than is suggested in the press conference, or at least the reporting after the press conference, and I think they are. I think in terms of what the Fed did, I think they're right. You know, it could be that the transitory nature of those tariffs are going to be working through the economy just fine. But the potential is that they could disrupt inflation expectations. You see second-on effects, other prices rise, not just the ones tariffed, and that could become an inflationary problem. And they need to balance that off of what else is going to happen in the economy later on, where we could see the uncertainty actually weighing on things more than it has so far. So they've got to be focused on both parts of the mandate and making sure that they do re-anchor inflation expectations or maintain the anchoring if you believe they haven't de-anchored yet, and then think about growth and what the effect of some of the other policies are going to be on growth. And it's not just the uncertainty around the tariff policy, which we're already starting to see some of the reaction to that by both businesses and consumers being a little more wary of spending, right? There are other things coming in terms of tax, cuts that could be buoying the economy and buoying growth later on. So they're going to have to balance both those kind of policies and then set that against the other part of their mandate, which is inflation. So it's going to be a little bit hard to navigate, and they're going to have to keep balancing, and they're going to have to be more nimble than they usually are, because the dynamics here could be different than what they are expecting. So looking at a lot of scenarios is probably the way to go here.
Demanding more nimbleness sounds like it opens the door for more potential errors to happen with the economy. I mean, do you think there's more risk here, than there was, 6 months ago for the economy?
Well, we know that risks have gone up. I mean, there's no doubt about that because of the change that we're encompassing here. And, in the long run, maybe some of the change will be good, but in the short run, it can be very disruptive. And we've seen that already. If you talk to businesses, a lot of them tell me, just tell me what the rules of the game are. I can handle it. The economy's resilient is another way to say that. But if I don't know what the rules of the games are, it's hard to play. So, we're already seeing some of that, and that's what makes this a little bit tricky, right? Because you could have a pause in growth or downturn in growth now, then you could have the inflation come via the tariffs. And so even if it's not a lasting inflation, you're going to see prices rise because of the tariffs, at least on some goods, and that could feed into inflation expectations. So you could have that combination that would be difficult to navigate if you're trying to keep your eye on both parts of the mandate and navigate as well in an uncertain environment. And I think that's what the Fed faces, as well as every business and every consumer. They don't really know what's coming, and so they're going to be a little more cautious than they were before.
All right, Loretta, we've got to leave it there. Thank you so much for joining us. It's great to see you. Loretta
Absolutely.
Now, when is the promo?
After the news alert.
Oh, it's coming up. Okay. All right, we gotta save time. Watching shares of Tesla. New piece in the information. Says the company is planning to introduce long-awaited battery innovation in Cybertrucks that could sharply decrease manufacturing costs. The report describes it as a change in the manufacturing process that Tesla has previously said could save $1 billion a year or more. Up next, we're going to wrap up the show with Guy Adami and tell you about a special event taking place right here at the NASDAQ at 5 p.m.
The event's not, but Fast Money's at 5.
Of course it is.
The event.
Insurance.
Make sure to register for the next Fast Money Live event that's coming up on June 5th in this turbulent and unsettled market. You can come join us for this unique in-person experience right here at the NASDAQ market site. A chance to connect with the Fast Money traders, ask questions, get their perspectives on how to navigate your investments in this topsy-turvy environment. To register for the next Fast Money Live, scan the QR code on your screen or go to cnbcevents.com/fastmoney.
Is that definitely the lineup? You know, because it's not the same lineup every. Oh, okay.
It changes, you know.
But for the next live
for
show.
this next one, yeah.
Okay.
That'll be the one.
Then I want to come to this one.
Well, you should. Why wouldn't you?
You can scan the QR code and get.
If people are watching right now, know that Joe Kernan's going to be there.
I mean,
it's already sold out. We don't need any more.
No, I don't think it's sold out yet.
The last ones were.
The last one sold out, but we're just starting to promote it now.
We take a wait list.
Is it in the same area?
It's
Up there?
upstairs.
You haven't gotten bigger space, I would think. MSG.
Now you're making fun of us.
No, yes,
It's not
of
nice.
course he's making.
No, I am not.
It's not
No,
nice,
but if the
Joe.
people watching right now, if they knew that Joe Kernan
would be there
of Squawk, the original Morning Joe,
Exactly.
from 6 a.m. to 9 a.m. every morning, was going to be there.
Oh, it'd be
like that.
Yeah, totally.
I could be a special guest.
Joe was mad at me. He's been mad at me in the break.
I know,
Meanwhile,
he's been yelling at you.
what did I do for Joe earlier today?
So the guy said, "Okay, what can I get you, Joe?"
This
said,
is a
dots,
weird- this
the
is like
candy
odds.
dots, red dots only.
I wanna
So the guy
know.
goes out, and what does he bring back, Joe? Show the
Some
viewers.
juicy fruits.
I can
Because
say
they
he
have
got
dots.
They're not showing it, but he got me these red
Right.
fruits.
And they're all
And
red.
they're all red.
They're all red.
And the box
I don't know
was
how you
sealed.
did that.
Box
Look at that. The
was-
box
They really
was
are.
sealed.
The box was sealed. They're
Now,
all red.
you with that O's cat comes here, and you guys are like, oh my God!
Yeah, look at
I
that.
do this,
Look
and
at
it's
the
like
magic.
nothing.
This is like the Legos that
I mean,
he pulled out at the
Imagine
end.
what happens at Fast
Imagine
Money
what happens
Live.
at Fast Money Live.
If Guy can do that,
If
what
I
else
can make
he
red
do?
dots appear, imagine at Fast Money at 5 Live.
You know what? You're really good at this, at being a magician.
Not good at many other
Oh, I didn't
things.
say that. No.
Let's talk market.
Let's talk real quick. There are interesting, clearly things going on. I mean, interest rates lower. Why is that? I think because growth is slowing. So rates lower is
How about
not
copper?
necessarily.
Copper goes
Thank
through
you
the
so
roof.
much. Now, if you look at copper, on the other hand, Joe, as you pay attention to,
I am.
probably the most
Listen.
important metal out there
I've
in
seen
terms
it.
of the economy, that's making highs here.
Right.
So there's a bit of a disconnect. So I think there is an inflation problem. I think there's a growth problem, and you're going to have to figure it out. So lower rates in this environment, to me, are not some salve or panacea.
Salve is a very
It's a
good
great
word.
word. There's an
Twice
L in
so
there.
far
Did I
this
use
hour.
it twice?
You did.
I apologize.
No, but it's an
Is
excellent
the L
word.
pronounced?
I just did.
It is.
I think it's sad.
I think it's.
Well, why? If it's in there, why wouldn't you use it?
Because there's a lot of words like that.
For example,
I just saw it on the Connections, the New York Times thing. One of the four together were words that the last letter was not pronounced.
all right, how do you pronounce the word G-A-I-N?
You gonna talk about?
Gain.
Yeah.
So how do you pronounce the word A-G?
No, at the end. At the end, there are lots of words that we don't pronounce.
Anyway.
The letter.
Oh, just pronunciation is a very important thing. The other
It
thing,
is.
these Chinese stocks have been on fire.
Yes.
Have your crack staff put up an Alibaba chart or FXI chart, and you'll see this is divorced of the economy. So you can be bullish of these equities and be bearish of the economy, and that's going to work for a while. So I think a lot of these Chinese names will continue higher. And lastly, energy stocks are way too cheap, Joe. So if you see off your phone, please, a rotation out of tech, you can see it into the energy space. And I really enjoyed being here with you, and I was sincere in my opening comments that you are better looking now than you've ever been, potentially.
Wow.
Knight, as in Knights of the Round Table, no K. Debt, you do not pronounce the B. Island, you do not pronounce the S. There's thousands and thousands of these.
Thousands and thousands.
And that's what I was doing on my phone. I'm not
Islands
ignoring. I'm
in
not
the
ignoring
sun.
you.
No,
I'm not
you
ignoring
are.
you.
You're mad at me. I know you're mad at me.
He is.
You had some disclosures off camera then. I'm not mad. I'm disappointed.
Anyway.
Well, disappointed is fine. I mean, I don't want you to be mad. We should all be able to get along and have civil
I agree,
conversations.
no matter what your beliefs are, whether, religious, political, etc.
Sports
We should
teams.
all find common ground.
You like George-
I can't
We're
help
all
that the Reds
Americans,
suck.
Joe.
I mean, Cincinnati
You
is
can't help that Xavier's.
lousy
You can't help
sports.
Xavier's in the tournament in Georgetown. didn't even
Georgetown is
come
not in
close.
this tournament. No, they've fallen on hard times on the hilltop, but they will come back to their 80s.
I like the coach now. I think that's the first step. You like the coach?
Rick Pitino, by the way, we got to get out of here. He's a huge
Fan of
Squawk
the
Bach fan. He loves Joe
I play
Kernan.
golf with him.
I thought you were going to say he's huge Fast Money.
Well, I
He's
mean,
been
that
on
goes-
Fast Money.
That goes without
I
saying.
played golf with him. I don't think
Anyway.
Tahoe. I love Rick. I do. He thinks he's a better golfer than me.
Guy, I'll see you at 5. We'll talk FedEx, we'll talk Nike, we'll talk Lennar, all reporting after the bell.
All right, stock futures are now sharply lower. Nothing to do with Guy being here. Make sure you join us tomorrow. Squawk on the Street is coming up next.
Good Thursday morning. Welcome to Squawk on the Street. I'm David Faber right here at Post 9 of the New York Stock Exchange. Jim Cramer, well, he continues that West Coast tour. He's now in Vegas. He's got a few more interviews that are lined up. Looking very dapper there as well in that nice gray
it's
suit
Home
there.
Depot. You gotta look good. You gotta look your best.
Yeah, there you go. All right, we're going to give you a look at futures right now, Jim, before we get talking. As Joe just said, we are looking for a lower open. You can see after a nice rally yesterday on Fed Day. Our roadmap does begin with the Fed, tariffs, and inflation. The president, by the way, late last night saying rates should be cut to ease the economy's tariff transition. Plus, Tesla shares, they're still under pressure, now on track for what would be the longest weekly losing streak ever. The company also recalling most Cybertrucks, that's most of the ones that are out there, at least, to fix an exterior panel concern. And Beacon Roofing, yeah, it agrees to that $7.7 billion buyout from QXO. We're going to have the chairman and CEO of QXO, Brad Jacobs. He's going to join us, both of us, me and Jim, this hour. All right, let's get to that dapper-looking Cramer. Why are you in a Home Depot and why are you in Las Vegas?
We've got all the managers here. Remember, we're about to have what I regard as Home Depot's Christmas season, which is the gardening season. Those of us who are gardeners, my 37th this year, know that it all starts at Home Depot, whether it be the flats or the seeds or all the great equipment. So there's no place to start the season, even though in New York and New Jersey it's a little early, than coming to Home Depot.
Nice. All right.
Yeah, it's their conference. It's huge. All the managers are here. Thank you.
Yeah. All right.
You love Home Depot, right? You love it.
Sure, I actually have spent some time at Home Depot. So look at that. You got a good
You've
lineup
not
coming
spent
up as well.
You've not spent 15 minutes in Home Depot.
I have. I've been to the one up in your house in Connecticut. I have. I bought a drill. I bought a lot of stuff there. Not that I ever used it, but yeah, an axe.
Oh, all right. Just I want to be certain that you've never really kind of dabbled in anything.
No,
inside
I've
the house.
walked the aisles many times. Many times. All right, let's get to the markets now, Mr. Cramer, shall we? Because we're coming off that nice rally, of course. That was yesterday. The Fed holding rates steady, as all our viewers know. Still said, there could be 2 cuts. Certainly that's still on the table this year. When asked if he expects tariffs to have a long-lasting inflation impact or an impact on inflation, here's what Chair Powell said during his press conference yesterday.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored.
Jim, your thoughts about that move yesterday, based obviously on some of the comments that he made, and what we're seeing today in terms of at least what appears to be 27 minutes from now, a significantly lower open.
People at home have to recognize, David, that there are 2 markets. There's the very considered market that was in keeping with the considered Fed Reserve chief, and that's what we had after 2 o'clock. And then there's the wild nighttime market where you come in and everything has just been divorced from whatever you heard the day before. It must be very confusing for people to say, oh my, what happened? Seems like there's a wholesale reconfiguration, a reset, so to speak. But it's all nonsense. What you see on the screen is worthless. No longer do these futures have any sort of correlation with what happened even last night. Now, some of that could be because we have a new president. Some of it could just be that there's lunacy and people who are not manipulating but are making ill-advised trades well before the market opens. You're seeing the 24-hour market, David. Like, the problem is, in keeping with the fact of I'm at Home Depot, the traders are dumb as wood.
All right. All that being said, I still want to get a kind of sense for you in terms of how you're approaching this market right now. Given we got the Fed out of the way, so to speak, at least for the week. We're still dealing with a lot of concern about what impact tariffs are going to have when we finally at least get to see what we're talking about on April 2nd. We're getting closer, obviously, to that date. And then continued concern about the consumer as well. I think the latest, Jamie Dimon was talking yesterday. I think he was at an Adobe summit of some kind, but he was talking to Shantanu as well, Jim. Take a listen, because Dimon has, we call him Hurricane Jamie, because he was he's kind of always been talking perhaps about what could happen on the bad side of things, not that it really has, and he kind of continues to do that. Take a listen.
Consumers at the low end have basically spent it down, and they're starting to do what I call traditional things when they need some extra money, which is canceling a trip, going to a cheaper restaurant, etc. People at the high end still have their money's down a lot, but they are much wealthier. Think of homes and stock prices over the last 20 years. And a very important point for all of us in the room is the bottom 20% didn't get a pay raise for 25 years.
That's a good point. And Jim, where do you stand right now on any number of those issues?
I think March is weak. I think the consumer is spending less. I agree with Jamie Dimon. By the way, this very morning, David, Mike Mayo, a showman from Wells Fargo, calls J.P. Morgan the NVIDIA of banking. So this is the piece that bridges me from where we were yesterday. Look, I think that there's genuine weakness, and the endless talk about tariffs is soon going to make it so that it's too boring to listen to us. Everyone is concerned about tariffs. People are asking about whether it's reciprocal or protective. Once again, I hear, is it Hamilton or McKinley? Let's stop it. No one even knows who those guys anymore. What bill is McKinley on? But I will say that it is worrisome to people, and so therefore they sell. As soon as they hear tariffs, they get nervous. We heard it all. Look, if you're going to buy some equipment from Dell, and Dell has to import some things, is it 25%? Is something that's $100, $125? People want certainty. We don't have certainty yet. Maybe April 2nd, the day after April Fool's Day, we'll have a better feel for everything.
I think that's what we're hoping for. Perhaps those hopes will be realized as well. At least if we get some certainty, again, to use that word, around what things are going to look like. And that will allow many corporations to also make decisions, because, in terms of how you're going to be spending, you have to understand what the cost side looks like.
Right, and that's where you have a picture of Dell up there. Now, Dell is selling at 9 times earnings. Now, if they decide to tariff everything that Dell brings into our shores, then it's not selling at 9 times earnings, because it's not going to have those kinds of earnings. It's going to turn out to be much more expensive. So people don't know what to do. I look at Dell's cash flow. It is just huge. I look at what Michael Dell is saying about the second half of the year, and these data centers, which are just chock full, and the spending's incredible. And I say it can override whatever people are thinking. But that means you have to buy it into the teeth of a sell-off. And people are much more comfortable buying up than they are buying down. And that is a major mistake that we have to break people of once we have a president that is involved with the actual pricing of securities pretty much every day.
Yeah, it's kind of hard to do. All right, well, that kind of takes us to NVIDIA and the GTC event. You obviously spent a couple of days there, more than that. You sat down with Mr. Jensen Huang, of course, on our show at the 10 o'clock, and then a lot longer as well on Mad Money, sort of breaking down his outlook for the company. Take a listen.
We now have to build AI infrastructure for 3 industries: for the cloud, for enterprise IT, and for robotics.
Well, that's, in the end, that's the world.
This is, yeah, we're gonna be the foundation for
the world.
The world, hopefully, yeah.
Foundation for the world, that's pretty significant ambition, I guess, Jim.
I wish I could say it was just hubris. The market seems to think it is. Stock selling for arguably 19 times earnings. I think it's all wrong. I think NVIDIA's an inexpensive stock. $1 trillion total addressable market for the cloud, $1 trillion for autonomous vehicles, $1 trillion for robots. The robots I saw, David, were really the stars of the show. They were remarkable, whether they be little droids or whether it be robots that I had a very robust discussion with. The only thing they wouldn't talk about is tariffs. They're much better.
Tariffs. I mean, we had a conversation yesterday about robots, quite a significant one, so I don't want to go down. Oh, there it is. Actually, all right.
Yeah.
That is one cute robot.
The one on the right is protective tariffs. The one on
Tariffs,
the left is
tariffs.
just reciprocal. And then I said, you know what? That's all I need to know. Goodbye. Sell everything. I mean, that's what people are doing. I think that look, you know that there's a bit of optimism out here about the president.
Okay.
I don't know if we have a 7-second clip about what Jensen's saying about the president in his meetings and how he's.
Oh shit! What did I just do? I can't believe I just did that.